To sort of round out the week here, we've had so much fuzz feet this week, Bramo. No big changes, I have to say, no big changes at all.
I want to make a placement. I think that would be really fun with
What,
all
for
of
the
the
kids?
여러분 안녕하세요. 뉴스 읽어주는 여자입니다.
make them run it out.
Not much has
뭐
changed.
어떻게 여러분 잘 지내고
Not much
계신
has
거죠?
changed for them. They haven't had to change their
저는
views
그렇지
in quite the same
못합니다.
way this market has had to over the last 2 months.
어제
They had 3 rate
반선
cuts this year.
보시는
They
분들
watched
아마
the
아실
roller
겁니다.
coaster and then
제가
come back to them.
어제
Is the balance of
생초음에
forces so shifting in a different
러스컷
way?
당했어요.
Talk about the potential for more rate hikes. I don't
뭐
think that people are
누구
really giving that
때문인지
real thought.
얘기 안
The
할
idea of no
거고
rate cuts, though, that's
뭐
what I want to
아무튼
hear them play with around
그런
Christmas.
일이
Been looking forward to this conversation,
있었고
so we can
그러니까
play that
제가
story right
오늘은
now around the edges.
텐션이
Chief economist at
완전
Investment
떨어질
Banking
수
on the rate cut
있는
debate saying
상황이라서
this. I
좀
want to convince
양해를
investors to
부탁드립니다.
rethink what higher interest rates can mean for
아무튼
investment
시작해
returns. Caught to my
볼게요.
elbow is the expectation that interest
지금
rates are renormalizing
드디어
at a higher
금요일
level.
금요일이고 지금 한국 시간으로 10시 37분이고요. 전 시장 딱 거의 1시간 남았고 그리고 우리가 이렇게 주원 씨랑 같이 다시 나왔습니다. 주원 씨 안녕하세요.
안녕하세요, 정치자 여러분. 반갑습니다. 주원입니다.
네,
참고로 어마어마한 일이 많았고, 생각하기도 끔찍하네. 일이 있습니다. 지금은 많이 도와주셨는데요. 스포츠 최고는 강아지들의 체력이 너무나 크셔서 고생을 많이 힘들었어요. 정말 많이 힘들었어요. 그래서 지금은 조금은 안정을 취하셔서 그리고 정신을 차리고 이제 화이팅 해보자. 이제 동업이니까 그런 마음으로 하고, 저도 오늘부터는 이제 정보련다가 조력자가 아닌 진정한 실전 매매 트레이더의 모습을 한번 보려고 질문하고 여러분들께 인사드립니다. 감사합니다. 그리고 오늘은 한국은 대한독립 반세 그 때를 이어서 저희도 오늘 실전 매매 어떻게 이득 볼 수 있도록 노력하겠습니다. 일단은 리스님이 조금 더 안정을 취하셔야 되니까 리스니까 보도록 내기 부탁드리겠습니다. 그리고 제가 시장 설명을 잘 드리겠습니다.
뭐 어제도 멋진 매매를 하려고 하시잖아요. 뭐 어느 정도 멋진 매매를 했죠, 우리가. 그쵸? 잘못된 쪽으로 했는데 스펙테클이었죠. 어느 코미디 쇼 같기도 했고 아무튼 네, 그런 일이 있었군요. 그러니까 이런 일이 있었던 만큼 우리가 오늘 좀 열심히 매매를 해야죠. 다시 돈을 찾아야죠. 뭐 아무튼 여러분 지금 우리 시장 일정이 어떻게 되는지 조금만 이따가 알아보시고, 지금 잠시만요. 차트부터 볼까요? 지금 일단은 가격이 역시 나스닥답게 만만치 않아요. 지금 한 8,082번, 82, 83원 이렇게 가격이 더 올라가는데 오늘 차트 보니까 여기서 7시 반쯤에 아니다, 7시쯤에 확 떨어졌고, 그리고 지금 조금 더 올라가고 있는 것 같은데 전체적으로 이렇게 봤을 때 전 이제 진짜 모르겠어요. 어제 매도로 생각했는데 완전 아니었고 완전 매수였고 그러니까 이제 진짜 제 감으로 못 믿고 이제 그냥 그 뉴스에 나오는 정보 발표, 예정된 발표 이렇게 이런 정보를 가지고 매매를 해야 되겠습니다. 그렇게 하기 위해서 우리가 발표의 일정을 알아야죠, 그렇죠? 그러니까 지금 주한 씨한테 물어봅시다. 주한 씨,
그다음에 뻔하게 불러 진짜 그거 아니었거든. 혹시 여러분들 상상하지 못하실 겁니다. 이것도. 근데 어제도 잠시 잘못된 매매라고 하셨는데 물론 잘못된 매매는 맞아요. 왜냐하면 타이밍 싸움에서 졌으니까. 하지만 타이밍이 어제도 차트를 보시면 급등을 강하게 그랬어요. 그 급등할 때 계약서들을 잘못 안 했던 그런 다음에 급등할 때 조금 낮게 했으면 매스님의 매도는 사실 틀리게 아니었어요. 근데 그냥 매매라는 건 결론은 타이밍입니다. 제가 처음에도 설명드렸지만 내가 지금 매도해야 되냐, 내가 여행을 투자해서 그러다는 건데 사람으로 치면 뼈냐 허리냐 뭐했냐 그걸 잡아야 되는 거죠. 그걸 잡고 플랜을 잡고 단계적으로 그거를 해야 되는데 그걸 거의 못해요. 근데 어제는 저희는 반성하는 게 맞습니다. 이유는 뭐였냐면 어제 사실 PC 발표로 어마어마하게 큰 문제가 나뉘었는데 솔직히 말씀드리면 뉴스님과 저는 좀 마음이 평안했었어요. 긴장 솔직히 별로 안 했었어요. 그래서 별 생각 없이 그냥 들어갔었어요. 사실은 많이 올라갔으니 올라가는 게 있으면 내려가는 게 있으니까 떨어지겠지? 솔직히 이런 마음이었어요. 근데 그게 계약서 조절과 다른 것을 잘못해서 큰일 나는 일이 발생을 했던 거죠. 자, 리스님, 매매는 가품과 함께 성장하는 겁니다. 성숙해지는 거고, 잊으시고 이제는 로스컬? 저희가 뭐 매매가 끝났으니까 저희 지금 단독은 있잖아요. 저희 매매는 내가 포기하지 않는 이상 끝나는 게 아니에요. 그러니 오늘부터 저를 좀 믿어주시고 이제 저희도 잠시 먼저 말씀드리며 매매 자리가 안 나온다든지 그 다음에 타이밍이 아니라든지 그걸 저희 매매를 한동안 안 할 겁니다. 정확한 자리 정확한 시스템에 들어갈 거니까 양해 부탁드리고 청취자 여러분들, 거기에 앞서 이제 잠시 오늘의 리스 발표 리스님이 말씀하셨으니까 잠시 말씀드릴게요. 일단은 지금 주요 일정에서 한국은 3월의 기념으로 오늘 시작했고요. 22시 30분에 연준 바뀐 종제 중립이고요. 대표권을 갖고 있습니다. 발표 끝났고요. 23시 45분에 미국 S&P 글로벌 제조업 PMI 이전이 51.5인데 그대로 예상도 그대로 하고 있어요. 이게 있고요. 그 다음 공동시에 미국 2월 미시간대 기대 인플레이션 조금 중요합니다. 기대 인플레이션 이전이 3.0 예상도 3.0 하고 있어요. 그 다음 또 같은 공동시 미국 2월 미시간대 기대 인플레이션 이전 3.3% 예상 3%예요. 또 같은 미국의 2월 미시간 소비자 심리지수 똑같이 생각하고 있고 인간 대표들이 00시 15분 연준 원로이사 랩하고요. 투표를 갖고 있습니다. 00시 15분에 연준 보스틱 종제 중립이고요. 투표권 갖고 있습니다. 3시에 베이커 힐전 시처리스로 있고요. 03시 30분에 연준 데일리 종제 중립이고요. 투표권 갖고 있습니다. 문다지서 5시 30분에 연준 코버로 임시 종제 중립을 투표권 없습니다. 그 다음에 10시에 유럽이 2월 CPI 시장치 이전에 2.8% 예상이 2.5였는데요. 2.6으로 조금 상했어요. 예상보다. 그런 일이 있었고요. 일정으로 ISM 제조업 미시간대 기대 인플레이션 이게 중요하죠. 그 다음에 대리 AI 서버 호황에 실적 상회했고요. 사운드아웃도 실적 예상 하회한 상태. 그러면서 어제 또 나스닥 들어가고 역사적 신고가를 또 뚫었는데요. 지금 현재는 행보하다가 다시 하락세에서 또 상승세로 지금 전환하고 있는데 차트가요. 진짜 오늘은 장 시작 시간부터 해서 많이 기대됩니다. 그리고 지금 현재 달러 인덱스는 다시 엄청 올라가고 있어요. 104.171. 10년물 채권 올라가고 있고요. 2년물 채권 올라가고 있고요. 골드 가격 행보. 비트코인은 아직도 미쳐있죠. 노론 상황의 상황이니까요. 오늘도 긴장하면서 여러분들 파이팅하는 저희 힘을 주십시오. 오늘도 힘이 좀 필요합니다. 부탁드리고요. 뉴스님의 또 말씀 한번 잠시 듣겠습니다.
네, 조은 씨 감사합니다. 오늘 금요일이고 그리고 오늘 이번 주에 매매를 성공할 수 있는 마지막 기회입니다. 제가 오늘도 돈을 못 달면 오늘도 러스컷 당하면 이번 주말 진짜 힘들 것 같고요. 그러니까 오늘 좀 열심히 해봐야죠, 그쵸? 여러분 지금 보시면 저는 지금 완전 무너져 있습니다. 네, 이렇게 스티커를 붙였는데 아무튼 제 마음속에 지금 이런 상황입니다. 그러니까 정신을 잘 못 차리고 있고요. 그래도 뭐 인생은 계속 살아야죠 뭐. 그리고 뭐 지금 주식 상황을 보면 오늘 같은 날은 거의 다 초록색이네요. 목요일 같은 경우에도 뭐 마이크로소프트, 메타, 엔비디아, 아마존 분위기가 좋은 것 같은데 분위기가 좋은 만큼 우리도 좋은 매매를 해봐야죠. 일단은 지금 주식 차트 보니까 우리가 그 포지션을 잡아야죠. 포지션 타이밍을 잘 봐야 되니까 이렇게 봐야 될 것 같고요.
리스님 잠시 지금 릴렉스 참 좋습니다. 릴렉스 정말 좋아요. 그러니 잠시 휴식도 잠시 하시고 릴렉스한 그 마음으로 또 가다만 또 매매 들어가야 되니까요. 잠시 뒷발 가지실까요? 5분간 잠시 휴식하다가 잠시 다시 인사드리도록 하시죠. 어떠실까요?
네, 좋습니다. 그럼 우리가 조금 있다가 다시 돌아오겠습니다. 여러분 기다려주세요.
Basically, we've seen that smartphone recession, and it's sort of coming back. But we heard that even from Cristiano Amon that they're sort of in a stability point, not necessarily the growth point yet. How do you then grow profit?
The stock just a little bit lower. We're down by 0.6%. Under surveillance this morning, the US consumer continues to surprise.
Throughout 2023 and into 2024, our guest at all three of our brands has been remarkably resilient to the extent that it surprised us a bit. Once they find us, they're very value focused. And so, the percentage of our tickets that are taking advantage of our LTOs, our limited time offers, and our value portion of our menus are up a few ticks from where it was before.
Here's the latest today. Target, Kroger, Gap, among many retailers set to report earnings next week. Chuck Grump of Gordon Haskett expecting shopping to pick up, saying this: the combination of positive real wage growth and improving inflation should become a source for consumers to shift back to goods as services plateau. Chuck joins us now for more. Chuck, can you identify the kind of companies then, based on that theme, that you like and think maybe are underappreciated? No audio. He's on mute. We'll sort that out, Chuck, if you can sort that out. If you can hear me. Are you back? You with us? Good. Chuck, you heard the question. You can carry on answering.
Yeah, sorry about that. So I think it's important to look back, right? If you look back in the holiday period, what we've heard from a couple of retailers, Walmart and Costco, is that we're beginning to see signs of some units starting to pick up in some of those discretionary categories. So when we look forward over the next several quarters, we think that we're going to continue to see that across retail. And I think companies that we think are poised to benefit would be Target in particular. We think Target's mix of general merchandise is much higher than most of their peers. Their general merchandise business has been under a lot of stress over the past few quarters. or really over the past year and a half. So it's really targets to one we think could benefit from that trend, and we upgraded the stock about a month ago.
Chuck, going to goods, away from services, why are services plateauing? What's happening there?
Well, I think we're starting to see signs. If you look at PCE data yesterday, you're starting to see services as a percentage of total PCE start to balance out, and we think goods could start to recover, and that's really predicated on inflation. What we're seeing in food prices start to compress. We think real wage growth is accelerating, so it's a little bit of a bet, but we think it could happen.
One thing I've noticed, Chuck, is that there's been sort of a shift, just subtly, under the hood in the narrative with respect to this divide between higher income and lower income families and their spending. And we've heard from several guests this week that actually there isn't that much of a divide and that there seems to be renewed appetite among lower and middle income houses to spend as well. Do you see that same trend? Do you expect that to come through in some of these earnings?
Yeah, that's a great point. I think if you look at the pressure that the low end sees over the past couple of years because of higher energy prices, because of higher gas prices, higher food, it's really condensed to that low income customer. And as we look forward, that lower income customer is going to start to get a benefit, and we think we actually could start to see it in the month of March. You know, if you recall, a year ago, tax refunds were really low. That really hurt the low end customer. When food prices skyrocket, that hurts the low end customer. So we think the low end companies like Dollar General, Dollar Tree, we think Walmart could benefit too. You see the off price guys. You know, TJX had great results a couple days ago. So yeah, we do believe in that trend.
There's also a question of how much this is being fueled on leverage. In terms of credit card receivables continuing to climb, we are seeing more defaults and delinquencies. Do you think that that's a head fake? Because ultimately it's coming off the lowest levels in 30 years and people have actually deleveraged? Or do you think this is something that really is a warning sign?
No, I don't. I mean, it's a yellow flag. I would deem not a red flag. If you look at household debt as a percentage of disposable income, it's still really low relative to historical levels. So this isn't 2008. I do think credit is increasing to a degree, but this isn't a terrible situation. I don't think at this point in time.
Bloomberg Intelligence, though, says the amount of retail bonds facing negative rating action surged to $69 billion in February, well above the $46 billion in February a year ago. At what point do you start to get concerned then?
We'll continue to monitor, the credit data that we see, and we'll also look at the delinquencies for the retailers that we cover that actually have credit card businesses. Macy's, Kohl's, Target, Lowe's to a degree. And right now, their credit trends are deteriorating. But again, it's not a red flag in our opinion at this point in time.
Chuck, can we talk about those consumer delinquencies that have picked up more recently? We hear so many competing theories on this. Some people have pointed out that, like you have, that real incomes are increasing, so the consumer's looking pretty decent. They have space to lever up here. Other people pointing out there's clear deterioration. Which one is it?
I think we'll continue to study the data over the next several quarters and see how the consumer reacts. Our view is that as we move through the spring, we think that spending will begin to accelerate. And we think that's a trend that, again, going back to the holiday period and what we heard from Walmart and Costco, we could start to see. But like everything, we're going to continue to study the data. And I think it's important to keep in mind, when unemployment is at the lowest levels since the 1950s, the consumer can spend, but they're also being very discerning where they're spending. You talked earlier on your guest on value, and value is in vogue. You'll see consumers spend spend at Costco a private branded product, but they'll also spend a big ticket item. So they're just being very discerning right now.
Dime Brand CEO saying exactly the same thing. Chuck, good to hear from you.
Yep.
Chuck Grom there of Gordon Haskett. Looking forward to the numbers coming next week. Speaking of next week, on Monday, here's the lineup for you. Laurie Cavacina of RBC Capital Markets, Jane Foley of Rabobank, Nuria Rabini of Macro Associates, and Torsten Slock of Apollo. Torsten Slock, a lot to answer for with that call. No rate cuts in 2024. We'll see where we are, Bramo, a week today.
I cannot wait to talk to him. I also can't wait to talk to Nero Rubini because I want to see his list of worries.
Oh, I bet you can't.
And basically,
He's got a book of them, Bramo.
He's got so many of them.
And how many do you two line up on?
We line up on a lot of them, but both of us sort of tend toward the catastrophic. But I am curious about how much that list has really gotten shrunk given some of the positivity.
At the very back of that book, if you look. So it's a thanks to me and TK. So I don't know how much we influenced that thinking over the years.
It's a natural sort of, safe kind of default to just kind of have catastrophic thinking.
Yeah, I mean, for me next week, it's less on the catastrophic thinking of Lisa, but more of the information we're going to find out of Washington. Jay Powell, President Biden, and more than a dozen states go to the polls for Super Tuesday.
There's a lot on deck. You know what happens next? What's tomorrow, Bramo?
Tomorrow's Saturday. It's the weekend.
Let's get you to the weekend.
Have a great one.
Like from New York City. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this and has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything.
One of my greatest advantages, I own my company 100%. No board of directors. I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division, Warner Discovery. It was just Warner Media at that time. He says, you know what, when we sit in our meetings, we don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. He goes, you know who we talk about? I go, who? You. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships. And you're like a little speedboat. And if there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I go, that's right. I'm always going to be that entrepreneur. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station, asking them to carry my once-a-week show. On average, they all said no 50 times, and I worked through about 50,000 no's to get 150 yeses. That guy that was at that dining room table trying to pay his phone bill is that same guy today, 30 years later. That fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal?
The deal?
The Deal. The Deal. That deal. The Deal.
Huge deal.
Who dug this up? What are y'all in trouble?
From New York City for our viewers worldwide, welcome. I'm Manus Trenny in for Jonathan Farrow. This is not a bubble. This is not a mania. So say Goldman Sachs' Peter Oppenheimer. We're going to debate that thesis over the next hour. Countdown to the open kicks in right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Coming up, stocks take a breather after closing out February at a record highs. Investors digest the latest Fed speak with more officials on deck, and the regional bank pressure mounts again. NYCB finds a material weakness in loan reviews. We begin with a big issue. New month, same story?
We've got these markets at record highs.
Record highs.
All-time highs.
The equity rally. It's pretty hard to fight at this point.
I think we're going to see a broadening out.
You are seeing a broadening out to other parts of the large cap universe.
That is a good narrative for a healthy bull market.
We do see in that Goldilocks scenario some quite substantial upside still to come.
Momentum, sentiment is driving this market higher.
Confidence in growth, inflation, and interest rates coming down.
Positive U.S. growth coupled with Fed cuts, which will come even if we get a little bit of a slowdown, means that you can have a pretty positive outlook for equities.
They're reflecting pretty good fundamentals.
The aggregate measure of equity positioning does not suggest euphoria.
I don't think the valuations yet are consistent with any kind of bubble or mania.
Joining me now to discuss that debate, it is Citigroup's Stuart Kaiser and Morgan Stanley's Lisa Charlotte. Good to have you with me both. This is not a bubble. This is not stretched. This is not euphoria that's going to break. Good morning to you both. Lisa, let me bring it straight to you. I mean, those are some sage voices throughout the week. Join the narrative and define whether you're on the euphoria and it's running out of steam narrative, or you think there is miles to go before we sleep. Good morning.
Good morning, and thanks for having us this morning. Look, I think we have to be very careful about using words like mania, because you never know that you're in an exuberant mania or a bubble until you're at the other side of it and it bursts. So, from where we're sitting, what we need to just ask ourselves is what is driving the rally. And so, what has perplexed us is that the bullish narrative has really shifted, right? And we've morphed almost uninterrupted without taking a breath since last November from a narrative that was exclusively about the Fed, exclusively about
여러분 다시 왔습니다. 지금 한국 시간으로 11시 33분이고요. 27 당시장 열기 전에 딱 27분 남았고, 그리고 지금 차트, 나스닥 차트 보니까 계속 또 왔다리 갔다리 하는데 타이밍을 못 잡겠어요. 진짜 너무 애매해가지고, 물론 여기 매수 짧게 들어갔을 수도 있었는데, 전 오래 하고 싶어서 일단은 안 했어요. 왜냐면 좀 위험하니까. 제가 지금 마음 상태도 안 좋고 위험한 거는 할 수는 없는 상황이라서 아무튼 그런 거예요.
미스님 파이팅 하고요. 우리가 또 3일절에 손해보면 매국 노죠. 그러니까 우리가 또 오늘은 씩씩한 모습으로 자신감으로 매매해서 우리가 보여드려야죠, 청취자분들한테. 근데 미스님 말씀 맞아요. 지금 좀 흥분하기보다는 원래 잘못된 봤을 때는 모르는데 약간 스쳐버리려고 하는 느낌이 좀 있는데, 한 10분씩 20분에 다 나가보라 하고 지금 이걸 가지고 있는데, 진짜 애매한 지점이거든요. 사실은 여기서는 매도로 들어가는 게 맞는데, 저의 개인적인 추천은 추천이 힘이 되는데 넣었던데, 조금만 더 보고 포지션을 잡아가는 걸로 한번 해보겠습니다, 청취자분들.
네, 좋습니다. 오케이. 여러분 일단 계속 뉴스를 지금 보고 있는데,
뉴스 상황들은 좀 어떤가요?
애매하죠. 애매하고 지금 다 쓸데없는 말인데.
Probably double digits this year, and that allows you to remain long equities. Obviously, the inflation data and potentially some of the event risks from the regional banks
지금 0.03% 2% 떨어지고 있고, 나스닥 퓨처스 0.02% 올라가고 있고, 그리고 라셀 2000 퓨처스 0.16% 지금 올라가고 있습니다. 이런 정보가밖에 없는데, 일단 또 지켜보겠습니다. 보시죠. 그리고 여러분 혹시 뉴스 소리가 또 뭐 필요하시면 제가 키울게요. 네, 댓글 남겨주시면 그때 소리를 키우겠습니다. 그리고 중간중간에 여러분 뭐 좋아요, 구독 좀 눌러주시고 우리 채널 추천 좀 해주시면 좋겠습니다. 구독자분들 좀 생각보다 많은데 근데 보니까 다들 제 라이브를 안 보는 것 같아요. 지금 뭐 한 1000명 정도 있는데 그 중에 라이브 보는 사람은 별로 없는 것 같아요. 뭐 시간이 안 맞을 수도 있으니까. 지금 왜냐면 뭐 한국에 11시고 지금 다들 바쁘실 수도 있으니까. 맞죠? 오늘 금요일이잖아요. 저 금요일이다 보니까 이 시간대 놀아야죠. 근데
분산이라고 다 물어가셨구나.
네.
야, 이 매일 돈을 버셔야 되는데. 그래도 좀 부럽긴 하네요.
그러니까요. 저도 오직 나가고 싶은데 근데 지금 라이브 하고 있어요. 참 섭섭하네요. 근데 여러분 이거 여러분들 위해서 재미를 주기 위해서 정보를 주기 위해서 이렇게 하는 거죠. 아시죠? 그러니까 우리 조현 씨랑 우리의 노력을 좀 인정받을 수 있는 날까지 열심히 해보겠습니다.
The jobs report, Manus. That's going to wrap up our week and start our February off with a bang, perhaps.
It defines the market when you break those numbers down. Mike, thank you very much. We'll build up to the jobs report next Friday. My guests this morning are Stuart Kaiser and Lisa.
뭐 일단 여러분 지금 뉴스 보니까 뉴스 보고 있는데 뭐 별로 중요한 정보가 없으니까 있으면 그때 알려드릴게요.
교수님, 지금 미국 의회 셧다운 피하기 위한 예산안들이 다 통과됐는데요. 3월 8일, 3월 22일까지 시한이 연장됐는데 이것도 알 수 없는 계속 리스크거든요. 네, 근데 뭐 항상 되지만 지금 교수님 제가 봤을 때 잠시장 이제 22분 전인데요. 차트의 느낌이 심리적으로 좀 심상치 않아요.
그렇죠.
지금의 심상치 않아요. 뭔가가 준비되고 있는 느낌이에요. 기술적 분석상으로는 저희는 어제 기술적 분석이 약한 사람들이니까 기술적 분석 빼고 느낌이 약간 플렉이 오기 시작하는데 타이밍이 잘 올 것 같으니까 잠시 또 청취자분들에게 조금 이따 다시 어차피 계속 말씀드릴 거니까 우리에게 중요한 건 매매잖아요. 그러니까 또 잠시 우리 집중해야 되니까 좀 이따 집중해서 다시 말씀드리는 걸로 그렇게 가시죠.
네, 알겠습니다. 그럼 우리가 딱 창시장 열 때쯤 다시 들어오겠습니다. 그때 타이밍이 좀 괜찮아야 되는데 뭐 일단 지켜봐야죠. 좀 매매를 좀 해보고 싶은데 뭐 일단 차트를 봐야죠. 아무튼 조금 이따 다시 들어오겠습니다.
Really has no legitimate justification to cut for the sake of cutting. And they may need to just be patient and not intervene in markets. And so, look, we're still biased to thinking that there is a slowdown in the data in the second half, which will justify potentially a couple of rate cuts. But it is entirely possible that Thorsten at Apollo has this right, and the Fed actually does stay on hold the entire year. One of the things that's interesting is we've gone from a market that may be dependent on the Fed talking about rate cuts to the fact that the Fed is confident enough to do nothing, actually being encouraging to market participants because they say, okay, the don't see any weakness ahead.
I mean, let's just consider the risk there that we go for no cuts, as you say, Lisa. You know, why cut for the sake of cutting? Stuart, here we are. We're going to come up to this March bumper where we're going to get new dots. And I suppose the market has now begun to climb since we could go from 3 dots to 2 dots. But do you think that there's merit in Apollo's thesis that we could get 0 cuts this year? What would it do to your perspective on markets and equity markets? Would that deliver the breather that Lisa has referred to that we just didn't take? This is what Torsten's saying. The reality is the US economy is simply not slowing down. The Fed pivot provided a strong tailwind in December, and as a result, the Fed will not cut rates this year. Rates are going to stay higher for longer.
Look, I mean, my question back to him will be why. You know, I think if you get no cuts this year because U.S. economic growth remains really strong, then I think equity markets perform just fine in that environment. I think that's largely what happened in 2023. You know, if they're forced not to cut because of upside inflation pressure, you know, that's a much different story, and I think that would read much more negative for markets. You know, I think the most important word in Daly's statement was unnecessary. And I think what the Fed told you in December was when you get core inflation down to this level, they are going to start to do a risk reward on the inflation fight relative to, creating a self-inflicted recession. And I think that's what she's saying is you've gotten inflation to a level at which they need to, really understand the risk reward around the growth side of things. So look, big picture, if you get 0 cuts this year and it comes from growth, I think you're fine. If you get 0 cuts because of upside inflation pressure, like the data over the last month would have suggested, that's a much different story. And in that case, I do think you have equity markets lower.
Okay, and of course we've got to see how the growth numbers come out and whether we get those earnings continue to rise. We've got more work to do, so stay with us for this Friday. We haven't finished yet. Stuart Kaiser, Lisa Shallop. My guest this morning on markets. Let's go under the hood for the head of the opening bell, I should say, with Abigail Doolittle. Abby, what have we got?
Well, Menace, we have some real bright spots and we have some real low spots. Starting off with a big bright spot, we have the shares of Dell surging. This after they put up a big earnings beat, sales beat, both driven by technology related to AI and their infrastructure unit. They put up $9.33 billion worth of revenue in that unit, a big beat, up 134% over the last year, but the rally continues. Apple, not so much, down 0.6% as Goldman takes the stock off of its conviction list. It's worth noting this stock is now flirting with an official correction from last year's high. And then we have New York Community Bank Corp down 21%. This after the company flagged issues around its CRE loans weeks ago, and of course put up that very disappointing quarter relative to building reserves. Now disclosing they have discovered quote-unquote material weaknesses in how it tracks loan risks. They're also changing CEOs effectively. The stock down nearly 75% from last summer's high. To end on a bright spot, though, Menace, there is breaking news right now. Vista Outdoor is climbing 8%. The Wall Street Journal is saying that MNC Capital has made a $35 per share all-cash bid for Vista Outdoor. Again, that stock up about 8%.
Yeah, this whole M&A feature of 2024 is really beginning to ramp up. We'll track those prices at the open. $35, all cash bid. Abby, thank you very much. Good work coming up. It is another chapter in the New York Community Bank saga.
Prior management team unfortunately had to go. I think we had to have the change in management to have a confidence change. The largest individual shareholder is Sandro Danello. He's taking charge. He's making very swift changes.
The bank flagging material weaknesses and replacing its CEO. The conversation ahead on Bloomberg. Good morning.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
This is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
Prior management team unfortunately had to go. I think we had to have the change in management to have a confidence change. The largest individual shareholder is Sandro Danello. He's taking charge. He's making very swift changes. This is all healthy to get the company where it needs to go. They're now $115 billion. They have to be part of the new world order that is a regional bank under new guidelines. And yes, the regulatory world is changing quickly, but you have to adapt and you can't sit still.
An optimistic take on the NY Community Bank. Now, traders are looking a little bit more pessimistically at the stock this morning. The pressure is there. The bank announced an abrupt leadership change and identified, as they refer to, material weaknesses in how it tracks its loans. Katie Greifeld is with me. Katie, define the material insight that they discovered.
Yeah, there's a lot of concern here, of course, about what else is under the hood. Just to go through some of the flurry of headlines that we got yesterday in a filing, of course, New York Community Bank said that it discovered, quote, material weaknesses in how it tracks loan risks. It also wrote down the value of companies that it acquired years ago. It took a $2.4 billion goodwill impairment, and it also announced that Alessandro Danello will become the bank's new CEO. Of course, he replaces Thomas Cangemi. And remember, Danello was appointed executive chairman last month. Now he's officially taking the reins. So the reason the stock is plunging right now is because Wall Street doesn't really know what's next here. If you go back to the end of January, when NYCB said that it was stockpiling cash to cover potential loan problems, of course, that really set off fears about the state of regional banks, the state of commercial real estate, and investors really have been on edge since. So remember, when it comes to New York Community Bank, it's a major lender to New York apartments. Its largest real estate exposure comes from about $37 billion in apartment loans, with almost half of that backed by rent-regulated complexes. And of course, the real fear here is the unknown. You take a look at Piper Sandler this morning, cutting the recommendation to neutral, saying, of course, that they thought that the bad news was behind this company, but the latest disclosures, quote, give us concern that there could be more issues coming down the pike, and you certainly see that reflected in shares this morning.
Indeed. Katie, thank you very much. Katie Greifeld on the very latest there. Stuart Kaiser and Lisa Charlotte are my guests this morning. Stuart, when I look at this single lane story this morning in regional banks, again, we're told it's idiosyncratic, it is not systemic. They're backed by apartment lending. Yes, they have oversight issues. When I talk to the market and when I understand what is the flow, how do regional banks, I mean, have people already exited regional banks per se, or how do they act as a hedge, perhaps against slowdown or a broadening of risk?
Yeah, Matt, I think from my point of view, people were trading regional banks as a little bit of a soft landing proxy, coming into the year. It's an area of the market that benefits from strong economic growth, and it's an area of the market that would have benefited, from lower yields. I think early in the year, because yields were lower, but it was alongside stronger growth, people were happy to kind of keep that risk on. But, I think the New York Community Bank news just reintroduced this sort of credit and real estate risk aspect. And, if you're a macro investor, you were not buying the regional banks because you had a strong view on that. You were buying it for the growth and rates, rates exposure. And I think for that reason, that event kind of took a lot of the more kind of macro investor base out of the space. And, regional banks, measured by the KRE, for instance, are down, 8 to 10% year to date, depending on when you measure it from. So I think the news is significant in that sense, that it reminds people that these risks have not been resolved. And it sort of, takes the legs out of this sort of soft landing narrative around regional banks.
think maybe, Lisa, this could be the breather. If this grows in any way or broadens out, maybe it's the breather or the jolt that will bring us a pause in the equity market. Lisa, I want to drill into this default narrative at the moment. I find a very interesting narrative, which is the breadth of defaults. It's not actually in the big 100. There's a heck of a lot of banks in the United States of America, so it's not in the top 100. Delinquencies are rising. They're rising in the smaller banks. It is the shape and direction of travel in delinquencies that I am interested in, and I'd like your take in terms of finance exposure and concern about those delinquencies from a broader market perspective.
Yeah, so look, what we have to remember is that the yield curve has now been inverted for, close to 18 months. I mean, it's an extraordinarily long period of inversion. And that puts extraordinary pressure on banks. The regional banks have, gone through their issues with regard to how they were funding themselves. We know the issues from last year with regard to the treasury market. The latest concerns are their exposure to local commercial real estate woes, and that's legitimate. And now you bring up, the issue about default rates rising, both around consumer exposure and, small and mid-sized business lending exposure. And look, this is the one part of the economy. We talked about how higher for longer might be okay for the large cap market because they see that as confidence in growth. But higher for longer rates and inflation are not going to help the parts of the market that are exposed to the regional banking system. And that is, some of these smaller local family-owned businesses, some of the unprofitable small businesses, some of the commercial real estate and local real estate businesses. These are folks who are very dependent on rates, and the timing of a rate cut matters to them. And this yield curve inversion is going to continue to be kind of a slow burning pressure on regional banks.
Okay, Lisa, thank you so much. Stuart, of course, we are aware of your momentum trades. It's long industrials, tech, and financials. But the headline of the day, team, is maybe the risk, according to Apollo, of no rate cuts. Let's all go home and think about that for this weekend. Stuart Kaiser, Lisa Charlotte, my guest this morning. Coming up, your morning calls. Let the good times roll. We'll catch up with Troy Goetsky of FS Investments on why he sees a rosy picture for the U.S. economy. Good morning from New York. This is Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
여러분 다시 돌아왔습니다. 지금 현 시간 5분 전이고요. 그리고 보시는 분들이 있으실 건데 지금 뉴스 나오는 중간은 나스닥이 0.90% 지금 올라가고 있습니다. 뭐 차트 보니까 또 좀 올라가고 있는 상황인 것 같기도 하고 이렇게 반 시장 열 때쯤 열고 나서 이렇게 쭉 올라갈 건지 아니면 확 떨어질지는 아직까지는 예상 불가. 어제도 예상을 못했고 지금 이런 지경이죠. 뭐 일단 5분 남았고 쭉 기다려봐야죠.
리스님, 진짜로 지금 계속 수직 정도거든요. 근데 이게 미쳐버리겠는데요. 마스터이 18,000 계속 지금 놀고 있잖아요. 18,080 계속 놀고 있잖아요. 사실은 여러분 이게 연극 말하면 지금 역사적 신고가를 돌파했던 이유 누구였어요? 그 지금 이화사예요. 이용 위에는 내 말한 적도 없어. 하늘 5대까지인지 모르는 거예요, 사실은. 근데 어떻게 상승만 하려는 거죠. 그리고 여러 가지 좀 나쁜 소식들도 있는데 정말 미치도록 지금 숏을 내고 싶은데요. 와 진짜 참겠습니다. 근데 장시작 제가 봤을 때는 미스님 장시작 때 잠시 모빙을 보고요. 편방해서 강하게 한번 들어가는 걸로 그렇게 한번 하시죠. 조금 더 지켜보고 있겠습니다.
네, 조금 더 지켜봐야 될 것 같은데. 허허. 아직은 좀 애매하네요. 오케이, 다시 지금 뉴스에 나오는 존버인데 뭐 항생 0.47% 올라가고 있고
지금 일단 무빙은 이제 장시작 3분 전인데 여기서 무빙을 가게 한번 지켜봐야 될 것 같아요. 잠시 너무 장애만 집중하면 우리가 또 이 답답한 또 다른 생각을 할 수가 있으니까 그러면 미스님 오늘부터는 좀 이렇게 이 경제 뉴스 얘기가 아니더라도 뭐 궁금하거나 미스님의 살아온 거라던가 미스님이 또 자아심이 또 다른 게 많으신 분이잖아요. 그런 것도 있으면 시청자분들한테 간단히 좀 재밌는 얘기도 해주시고 그렇게 부탁드려요. 물론 우리는 무서운 지금 장 거기에 있지만 그거 좀 부탁드립니다.
네, 그리고 여러분 뭐 궁금한 사항 아니면 아시죠? 좋아요, 구독 이런 거 다 눌러주시면 제가 진짜 기쁠 겁니다. 2분 전이고요. 조금 긴장되네요. 왜냐면 오늘 진짜 성공해야 되는데 와 진짜 한 200만 원 정도 타야 되는데 근데 쉽지 않을 것 같습니다. 아무리 금요일이라도 왜냐면 금요일은 원래 완전 제일 휘쭉박죽한 날이잖아요. 완전 왔다리 나가리 이렇게 계속한 날이다 보니까 오늘 좀 위험할 수 있을 것 같고 200만 원 힘들걸요? 힘들 건데 그래도 그만큼 각오를 잡고 가야죠. 1분 전이고요. 지금 쭉쭉쭉 올라가고 있는 것 같은데 근데 18,000원이면 좀 떨어져야 되는데 뭐 사실 어제도 그렇게 생각했어요.
진짜 이게 답답한 게 이게 너무 하늘에서 놀고 있으니까 이게 미치겠는 거죠. 여기서 어떻게 계속 매수만을 잡아야 되나. 근데 사실 아까 미스님이랑 우리 상의했었잖아. 우리 매수를 잡으려고. 근데 그게 조금 벗어나니까 이제 못 잡는 거예요, 사실은. 근데 장시작 이제 1분 전이니까 장시작 때 모델 보고 우리 발표가 있잖아요. 발표는 때 12시가 있으니까 그걸 보고 그런 식으로 한번 하는 걸로 한번 생각해 보시죠. 어떤 분이 시작했으니까 장시작도 올라가 또 미쳤어요.
오케이 역시 올라가고 있네. 나스닥이 이 자식 진짜 무서운 자식이네. 역시 오늘도 매도 아니었어. 이거는 제 상의 없이 지금 주원씨 매도로 들어가는데 오늘도 빼고 싶습니다, 주원씨. 뭐 물론 아직까지는 잘 상황을 좀 파악해야 되는데
저는 사실 그냥 지금 일단 느낌을 받아보려고 들어간 거예요. 진짜 안 믿어주시겠지만
네.
왜냐면 이게 무대백의 이유가 없어요 지금. 전 이해가 못 하겠는 거죠 지금 사실은. 그 이 느낌을 받아보려고 좀 들어갔어요 일단은요. 저 일단은 입장했습니다. 입장했어요. 54,800원이요. 어떠십니까?
제 500만 원 어디 있습니다. 에? 조원씨 5만원이라니 5만원이라니 진짜.
나가는 일은 잊으시고
아이씨.
다시 하셔야지. 왜 이러시나요 진짜.
에이구 참나. 여러분 참, 와, 이거 진짜 어제랑 진짜 비슷하네요. 어제도 이렇게 확 올라가는데, 진짜 이게 무슨 상황이야? 진짜? 요즘엔 나스닥 진짜 못해. 나스닥이 요즘 약간 비트코인 수준입니다. 그 예측할 수 없어. 비트코인도 그렇고, 요즘 나스닥도 그렇고. 일단은 매도로 예약을 좀 해놨는데 아무튼 오늘은 좀 작청을 좀 바꾸려고요. 원래 차트 보니까 차트 보면서 실시간으로 이렇게 매매를 했는데 오늘은 좀 조심스럽게 예약을 걸어놨습니다. 오늘
이스님 저는 한동안 욕을 먹어도 쇼츠이 되겠습니다. 쇼츠. 제가 이 나스닥을 잘 떠나드리겠습니다. 제가 이거는 말이 안 돼요. 어떻게 세상에 오르막 있으면 내려막도 있고요. 내려가다가 또 다시 올라가는 거고요. 그게 자연의 섭리인데 어떻게 계속 올라갑니까? 저는 원래 쇼츠가 아니었는데 오늘부터 나스닥 쇼츠입니다. 기대해 주십시오.
아주 그냥 주원씨 완전 신나시구나. 아이고 어떡하면 좋을까. 앞으로 와이프가 생기면 진짜 많이 힘들 것 같습니다. 참 계속 돌아가고 있는데 참 무섭네요. 오늘도 쉽지 않구만. 뉴스도 뭐 재밌는 거 없어 진짜.
스님 일단 장 지금 로딩이 좀 있는데요. 로딩 조금 더 지켜보고요. 저희 포지션도 급하게 들어갈 수 있으니까 지금 긴장돼서 계속 상황이니까 지금 큰 로딩이 나오고 있잖아요. 완전 디귿자예요 지금 디귿자. 그러니까 조금만 있다가 시청자분들 다른 얘기 조금 있다가 일단 매매에 집중하시죠. 잠시만 정치적으로 죄송합니다. 하지만 저희 힘내라고 대한민국이 만세입니다. 만세니까 저희한테 구독과 좋아요 부탁드립니다.
네, 우리도 만세, 대한민국도 만세, 여러분들도 만세. 우리가 지금 계약을 걸어놨으니까 일단 지켜봐야죠. 지켜보고 기다려봐야죠. 일단은 이따가 다시 오겠습니다. 네.
in reaction to this, a little bit higher now that it's gotten that 10K in. The other name that hasn't filed its 10K yet is Archer Daniels Midland. This is a U.S. agricultural trader. It has delayed publication for a different reason. It's doing an internal probe of its accounting issues having to do with its nutrition unit, according to sources, and in January announced it's putting CFO on leave. So this morning said it anticipates reporting material weakness in the company's internal financial reporting practices, but did say, and this may be the cause of some of this enthusiasm in the shares this morning, that this won't impact consolidated balance sheets, statements of earnings, and cash flows. Shares are down about 25% year to date, shares are down 25% year to date, but up about 1.5%.
Simone, thank you very much for the very latest on those. Let's turn our attention to Apple because it's been a heck of a week. Third day of declines. Goldman Sachs removes Apple from its conviction buy list. The concerns are around its revenue growth. Ed Ludlow is with me on this. I mean, they remain as a buy, and they have a price target above this level, but we've had price cuts, Ed, in the iPhone. We've had a lot of issues this week.
There's a difference between removing a name from your conviction list and then actually lacking conviction, right? They reiterate the buy. They've actually raised the price target on the stock to $232 from $223. But I guess that what Goldman's doing is amplifying the concerns that are out there, right? The reporting that on some third-party platforms, for example, Alibaba's Tmall in China, that the price of an iPhone dropped about $180 this week, which signals some weakness in what is a critical end market. But the language that Mike Ng uses from Goldman is that those growth narratives, the focus of the market on slower product cycle and the problems in China is masking the idea that the ecosystem is strong. I find that really interesting because look at our research from our Bloomberg intelligence analysts. This week, Mobile World Congress is going on in Barcelona. And what you saw from many of Apple's competitors, particularly Chinese domestic handset manufacturers, was them demonstrating how to use generative AI on a handset. Apple has not yet done that. But what Anurag Rana from Bloomberg is writing about is that, I don't know what generation iPhone you have, Manis. I always have the latest iPhone or Samsung, but 43% of all the handsets around the world, according to Bloomberg intelligence research, are the 12th generation or older. And they see real upside because an upgrade cycle could be driven if Apple gets its act together and says, look, we do generative AI, it's just not where we focus so far. I think there's probably still some jitters out there from the reporting in the week as well about the end of the Apple Car project after a decade of working on it.
Okay, Ed, thank you very much. And you're right, the nuance between conviction and buy is wide. Troy Gaetsky is FS Investments. My guest says this: let the good times roll. The data is truly painting a mind-bendingly rosy picture of the US economy after a horrific pandemic. Troy, good to have you with me. Mind-bending, bullish statement. I mean, there's no hesitancy in you this morning, is there? Good morning, Troy.
Good morning. Yeah. So, and remember, there's a difference between the U.S. economy and financial assets, which we have to remind people of to some extent. But yeah, look, you think about the path we walked through, it looked like a very reasonable probability that we had a recession sometime late 23, particularly when banks started to fail. You had a massively inverted yield curve, which Lisa was discussing earlier.
Yeah.
You had money supply shrinking. But if you look where we are today, I mean, obviously consumption's slowing, but the labor market's still very, very tight. It's very hard to identify a catalyst that would lead to a wave in layoffs, right, which would weaken the consumption power of the consumer. And government spending is trending higher. A lot of the stimulus is in the pipeline. It has yet to be spent. Labor hoarding is a real thing. So, the good news for investors is that the probability of recession has dropped dramatically. And so now it's really time to figure out how to put those cash hoards to work and what type of growth exposures do you want to go for and what type of income exposures do you want to go for?
Well, what kind of growth exposures do you want to go for? I can understand, and I've had a lot of verification on Mag 7 in terms of margins, in terms of sales.
Yes.
So where else is the growth narrative for you?
Yeah, so certainly you should have some exposure to market cap weighted indices. Definitely fade the whole equal weight, fade the value, catch up to growth because those are wonderful companies. But other than that, if you look at your choices, the area that we've liked for several years now is middle market private equity. Because there you have smaller companies where it's easier to grow EBITDA from 25 to say $75 million. The exit strategy is much more transparent, whether it's M&A, smaller IPOs, or selling to a mega cap LBO shop. You have far less leverage, which is critically important now because debt service coverage costs have gone up a lot as interest rates have risen. So you have less of a drag on free cash flow, and valuations are cheaper. And then on top of that, there's a wonderful secondary opportunity taking place now because institutions got a little bit over allocated to private equity, and the payouts from those vintages have slowed dramatically as capital market activity slowed. So that's been for the past 12, 18 months our favorite spot for growth other than, mega cap tech. And that's probably your best option, but you have to trade off liquidity to some extent. Obviously, these are not liquid positions like you have in stocks or cash.
No, we had EQT with us yesterday talking about those payouts and trying to get the investors to roll up for new investments. Can you just tell me where your view is on cash? Because we've now got this new debate. Apollo putting out there into the market the risk of no rate cuts this year. And yet I look at money market assets, Troy. They are at a record. And institutions led that flow. Where does cash play at all into your thinking?
Yeah, so great observation. I mean, you look at the cash hoards that have been built. That has really been the mega trend in this cycle, right? The big winner this cycle has been cash. Everything else has been details. So we've been articulating folks should focus on Northwest Quadrant strategies and the efficient frontier, less risk, decent return. Cash obviously fits there, but over time, right, you having some of that eroded from inflation, obviously, and we still think the Fed is going to cut slightly this year. So it's interesting to watch the narrative change. But now's the time to think about deploying that. And when you think about how you're going to deploy it, you probably don't want to move to very high risk investments immediately, particularly given where multiples are in U.S. equity markets. So you can think of things like senior secured commercial real estate lending, private credit, middle market private equity. Those have far less risk than, say, liquid equities or fixed income, and you can meaningfully increase your return. So now's the time to think about how to deploy that cash, not only for individual investors, but also institutions.
Now you've got a bit of a dig at the fixed income people out there. You say chance, as they call it in Monte Carlo, is that to the perma-bearish fixed income managers. I mean, should they just throw in the towel in terms of rate cuts, dramatic slowdown in the U.S. economy, and tacitly accept that we're going to have higher rates in the medium term? And when I say medium term, actually short term, I should qualify that and keep it to this year.
Yeah, it's really been unrealistic for a while. I mean, that the Fed would cut aggressively anytime soon. I mean, remember, coming into 2023, the bond market was pricing cuts. And I totally get it. Everybody talks their book. If you're long a bunch of duration, you're actually perversely rooting for a U.S. recession, so the Fed will cut and you have some price recession. But the reality of the situation is, coming into this year, the most we could see the Fed cutting was 50 to 75 basis points, and the data's continue to be strong. I'd be very cautious, though, about opining that the Fed's not going to cut at all this year, because real rates have gone up. They're positive now, whereas most of the post-pandemic period they've been negative. So it does make sense for the Fed to take a little bit of the pressure off in terms of the front end, but that still doesn't mean you have meaningful upside in fixed income, because naturally the curve should normalize. And when we look at the 10-year today, even in a recession, we think more like 3.25 to 3.5%, as opposed to 2 to 2.5. And that just means you don't even have that much upside in a recession, and recession's not happening anytime soon. So you just have to be realistic in fixed income that you're certainly earning more income than you did 3 years ago. The risk reward is obviously significantly better, but it's not like you have this great return potential. And in the meanwhile, just like we've seen happen this year, you can suffer some degree of mark-to-market losses from another bear steepener. Either way, the curve's going to normalize. We just think bear steepeners are more likely than bull steepeners in the short term.
Okay, Troy, we'll keep that in mind. I'll leave you with this thought from Barkin, where he's just been on TV. He says the Fed is not in a battle with markets. We're not trying to have swagger against the market. I love it. I mean, markets and the Fed are like two clashing titans, aren't they? Troy, thank you very much. But eventually, the Fed wins. Troy Duetsky of FS Investments coming up in the show. Shutdown averted for now.
It's good we're not shutting down. And now let us finish the job of funding the government so we don't have to do this again.
We'll have the details on those negotiations and the next looming deadline right here on Bloomberg.
dynamic move of the interest rates that we've seen from Chairman Powell? I mean, do you go fixed structure or floating structure? Much more like what they did in Europe.
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provided ourselves with a natural hedge, leaving some of our debt floating and some fixed.
You have to have short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, but we also have to be nimble around that as well because things change by the day. I know the folks who aren't willing to invest right now may have large pockets of investment. So I want to be in front of them. They may not be a buyer at this point, but I do want to spend a lot of time in front of that other set that is a buyer at this point. They're interested. They want to be an early adopter of the stock. They're interested in the story.
This is Dennis G. Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
Breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
When we pass this bill, we will have, thank God, avoided a shutdown with all its harmful effects on the American people. I thank my colleagues for working together. It's good we're not shutting down. And now let us finish the job of funding the government so we don't have to do this again.
Congress approving temporary funding to avert a partial shutdown. Now, the even measure moves to the next deadline, March 8th. President Biden writing in his statement, quote, I want to be clear. This is a short-term fix. In the days ahead, Congress must do its job and pass a full-year funding bills that deliver to the American people. Can they? Will they? Is it the appetite? Or is there political obfuscation? Anne-Marie Horder can divine that for me. Anne-Marie.
Well, they're kicking the can down the road, which we've seen them do not just once, but this is the fourth time at least they've been doing this. So what they have to do now is get these appropriation bills done. I'm less concerned with March 8th. March 22nd is going to become incredibly challenging. The kind of appropriation bills they need to start funding it when these departments have to deal with defense, homeland security, and what you are seeing is Republicans try to look for limits on some reproductive services, and also they want to change immigration laws. So then the policy is going to get very difficult when you start looking at how they're going to fund these administrations, part of the federal government. One thing you should note, Madison, everyone was talking about whether or not Speaker Johnson will lose his job. 97 Republicans voted against this stopgap funding measure, but yet a lot of them came out and they said, look, this is what Washington has to do, and for now, his job is safe. But there's going to be a lot of challenges upcoming.
Where are the biggest stumbling roadblocks to making a more progressive deal, a longer-term deal?
Well, we heard from Republicans that they don't want to do these omnibus deals. They just put everything into one package. They want 12 different appropriation bills. It looks like they're getting closer on some of these, that the deadline was supposed to be the 1st. It's now going to be the 8th. The issue is going to come when it comes to March 22nd. You have to remember, if they don't fund the government, the deal that was done under former Speaker McCarthy and President Biden would be a 1% cut across the board on where federal funding is right now. So potentially, if some Republicans want to drag this out to get to that day.
I think sometimes we might not see whether they come in, and of course next week we have State of the Union, we see the Tuesday. We're going to be busy in the world. Thank you very much. I'm reporting following the political junctures. We have some breaking PMIs for us in the Bloomberg Time. Abigail Wheeler is here to break them down.
We certainly do. We have lots of information to break down here, Mana. So relative to the S&P Global U.S. Manufacturing PMI, the final reading for February coming in at 52.2. This, of course, is an expansion territory. Anything below 50, contraction above is expansion. The survey had called for the preliminary 51.5. So this is a little better than expected. Strong for the economy. Not seeing too much of a reaction relative to rates, although they are slightly higher. So maybe that's a little bit of that strength there. As for other breaking news, New York Community Bank Corp, after that disclosure around material weaknesses being down. Shares had been halted for a period of time. They're now trading again at session lows, essentially down 27%. There's a slew of headlines out, including the idea that the material weaknesses are not expected to impact 2023 revenues. The allowance for credit losses isn't expected to change anytime soon, is one of the headlines. So it seems as though they are trying to convince investors that they are really taking care of the situation. But with the stock at session lows, investors really looking past this fear and uncertainty ruling as we have a change in the C-suite. And then not breaking news, but news that we try to do at this time every day. Sectors. From a sector standpoint, we have the S&P 500 up ever so slightly. We have a few sectors higher. Energy, the best sector, up 1.3%. This, of course, in sympathy with oil, up about 1.5%. The worst sectors, utilities down 1.6%. Yields are down. Of course, yesterday, though, also Xcel Energy revealed that they disclosed in a filing that a law firm, an unnamed law firm, is asking them to keep a utility pole that could be responsible for the big wildfires down there. That could be a piece of the weakness. On the week, we are looking at a number of the sectors trading higher. The home building sector up 1.3%, and then these are some of the subsectors, Manis. That KBW Bank Index, that's the one we really want to take a look at. The regional bank index down 2.8%, and of course, much of that driven by New York Community Bank Corp.
Absolutely. Great to get those headlines in, and the oil market trades higher, giving you that sector-wide performance. We're going to take you through the market moving events for the rest of your day on the Trading Diary in just a moment. Beautiful day in New York City. Good morning.
Until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Trading Diary, what's ahead of you? Well, we have University of Michigan consumer sentiment at the top of the hour, plus the ISM manufacturing. Fed speak throughout the day. Waller, Logan, Bostic, Daly, along with Kugler. Next week, all eyes on Super Tuesday. Politics features high on the agenda. Then you have Chair Powell testifying on Capitol Hill. Wednesday and Thursday, let's see what he has got to say. We haven't heard from him post 60 minutes. Let's count down to the open for this week. It has been manic in parts for some of the stocks. Dell is on fire. New York Community Bank Corp under pressure as we finish off this Friday. Thanks for being with us.
자, 지표 발표 4분 전. 자, 되게 중요합니다. 오늘의 매매. 자, 지금 본인 긴장하고 지금 여기서 매매 기다리고 있는데요. 일단 예약 들어오는 건 말고요. 만약에 실시간으로 지표 발표 순간 내용도 안 했습니다. 시청자 여러분 힘을 주세요.
네, 여러분 화이팅이고요. 지금 나스닥이 0.15% 올라가고 있습니다. 올라가고 있는데 우리한테 아직은 좋은 거죠? 좋은 거고, 왜냐면 우리가 계약을 걸어놨기 때문에 그 가격까지 좀 올라갔으면 해요. 뭐 물론 올라가면 잘못할 수도 있는데 그래도 기다려봐야죠.
지표 발표는 2분 전, 지표 발표는 2분 전. 자, 다들 긴장하시죠?
여러분 1분 남았습니다. 과연 발표 결과가 어떨지는 좀 긴장되네요. 일단 지금 계속 올라가고 있는 상황이고 좀 무섭네요.
지표 발표 나옵니다. 지표 발표 나옵니다. 김두스님 좀 부드럽게 얘기할 상황이 아니에요. 지금 실전입니다. 실전. 지금 사근의 정신으로 지금 부드러워야 되는 상황이에요. 지금.
매도 좀 맞는 포지션이었으면 좋겠습니다. 오케이, 일단 10초 전. 제발. 와.
미쳐야 어리겠네요. 미쳐야 어리겠어. 진짜 미친 나스닥은 와, 우리요 분양당해버리네요. 지표가 저태가 왔죠 지금. 자, 여러분 다들 긴장 영향 내려오면 니네까지 걸리면 와 대박 나는 데가. 자, 가보시죠. 근데
야, 이거 진짜 말이 돼? 아니 사실 여태쯤에 와 이거 진짜 많이 올라갔구나 생각했는데 그 위에 올라갈 수 없는 자리라고 생각했는데 그 정도 아니야. 계속 올라가고 있네.
Are the companies lean enough? Have they trimmed all the fat? The semiconductor business is a really cyclical business.
Breaking market headlines and corporate
무섭네.
news from across the globe.
Do investors like the M&A that we've seen?
일단 니스님 분석 전에는 그래요. 자, 지금 무빙이 너무 크기 때문에 다시 기대해 보시죠. 다시 두 번째 도전 다시 하겠습니다. 두 번째 도전 시청자분 기대해 주세요.
우리가 똑같은 계약을 이거 진짜 무섭네요. 결과가 괜찮았나?
님 실전 매매 그래도 22만 원 수익이지만 현재 수익이죠. 실전 매매 이제 좀 더 큰 걸 올립시다. 실전 매매 정신 차리시죠. 자, 여러분 지금 지표 발표 후 10년물 채권금리 급락하고 있고요. 2년물 채권금리 급락하고 있고요. 달러 인덱스 급락하고 있습니다. 오늘은 그대로고요. 비트코인 다시 가만 올리네요. 골드 올라가고 있고요. 미칠나스가 한번 가보시죠. 쇼츠형 끝제가 넣어드리겠습니다. 시청자분 한번 같이 힘 내주십시오. 그런데 가시죠.
끝을 보면 안 되잖아요. 우리가 어제 끝을 봤잖아요. 그만 안정하게 집중하게 조금 텐션을 그만 좀 올리세요. 제발 불안해 죽겠어 진짜.
미스님 보세요. 걱정 마시고 믿어주세요. 미스님이 옆에서 힘을 좀 내주시고 좀 믿어주셔요. 내내도 잘 되는 거지 자꾸 안 된다고 하면 됩니까? 긍정의 힘 보여주십시오. 미스님 부탁드려요.
알겠어요. 여러분 지금 뉴스 나오는 정보 나스닥이 0.20% 올라가고 있습니다. 지금 그만 좀 올라갔으면 좋겠는데 진짜. 이것 때문에 나가리 됐으니까 그만. 근데 이후로 또 계속 올라가면 이거 진짜 이거 말이 안 되잖아. 그 이후로 어떤 발표가 또 있나요? 잠시만요. 지금 12시 15분에 또 발표가 있으니까.
네, 미스님 궁금하실 거는 지금 발표가 예상치보다 좀 높게 나왔어요. 그 다음에 금융시 15분은 이거는 발표가 아니라 그 인터뷰예요. 이제 이거를 연준 이사가 좀 더 부정적인 얘기를 하냐, 좋은 얘기를 하냐 그런 상황 같거든요. 그건 좀 더 봐야 되는 상황입니다. 근데 다시 조금 전에 우리가 지금 하나 지금 잠깐 잘 나왔죠. 다시 지금 또 올라가는 그 힘을 내고 있어요. 나스닥 미친 나스닥이요. 자, 리스닝 긴장하고 또 정치자분들한테 좋은 얘기 부탁드립니다.
저는 지금 그런 상황이 아니거든요, 사실. 여러분 매매를 하는지 말든지 사실 그전 상황인데 좀 상관없어요. 전 지금 제 담보금이 되게 집중하게 보고 있는데 아직까지는 만족스럽지 않아요. 물론 오늘은 20만 원 사는데 모자랍니다. 오늘도 좀 욕심을 부리고 싶은데 안타깝게도 그런 상황이 아닙니다. 차트가 너무 왔다리 갔다리 하다 보니까 맞는 포지션을 잡는 게 그렇게 쉬운 일이 아닙니다.
네, 맞습니다, 뉴스님. 그렇게 지금 아직 시장에 저렇게 무섭게 왔다 갔다 하는 이유는 뭐냐면요. 제주 PMI가 예상보다 좀 높게 나왔어요. 근데 또 기대 인플레이션은 그대로예요. 그 다음에 제주 PMI는 좀 낮게 나왔어요. 애매하죠. 한쪽 좋다는 건 아니에요. 결론은 인플레이션이 잡힌다, 금리나 때문에, 기대감 때문에 좀 잘 흔들리는데요. 저는 아직은 모두가 연구하고 있는 게 아닐까 그런 생각을 잠시 하고 있습니다. 우리는 현명하게 속지 말고 하루하루 좋은 돈을 익절할 수 있게 손해보지 않는 열심히 하는 그런 투자자가 되기 위해서 또 노력하도록 하시죠.
네, 노력을 좀 부탁드립니다. 그냥 너무 신나게 매매를 하지 말고 집중하게 안정하게 갔으면 좋겠습니다. 아직까지는 우리가 그 계약을 풀어놓은 상태고, 근데 왠지 그 가격까지 도달할 수 있을 것 같은데, 그 가격까지 도달하고, 그 가격까지 도달하고 확 떨어졌으면 좋겠습니다. 일단. 네.
교수님이 사실 어저께 기가 엄청 빨리셨어요. 그래서 제가 옆에서 보는 가까운 데서 보는 관점으로는 리스님의 지금 아직 집중력이나 기가 좋지 않아. 그러니 리스님 또 오는데 기빨리지 마시고 오늘보다 더 어리잖아요. 저한테 좀 맡겨보시고 일단 이쯤에서 청취자분들하고는 인사를 드리고 주말 잘 보내시고 또 월요일에 좋은 모습으로 더 좋은 모습 멋있는 모습으로 만나 뵙고 또 말씀드려야 되니까 힘을 또 재충전해야 되는 상황이에요. 그때 말해서 리스님이 지금 어저께 번아웃이 온 거죠. 번아웃이 왔어요. 그리고 지금 약간 골든적인 동물 건능이 너무 심하신 분이세요 지금. 그런 이럴 때는 리셋하고 릴렉스하고 모두 샤워도 하고 따뜻한 물에 담그고 해서 잠으신 다음에 좋으신 걸로 가고 오늘은 청취자분들 저희가 계속 저 잠상을 보면서 짧게 또 길게 들어가서 저희는 계속 매매를 할 거니까요. 그렇게 집중하는 걸로 하고 이쯤에서 청취자분들과 인사 나누는 게 어떨까 그 생각이 드네요.
네, 오케이. 무슨 말씀인지 잘 알고 저는 쉴게요. 저 진짜 이제 좀 쉬어야 될 것 같고 이번 주는 좀 많이 힘들었습니다. 멘탈적으로도 뭐 여러 가지 힘이 좀 많이 섰는데 이번 주말에 잘 쉬고 새로운 마음으로 다음 주 다시 들어오겠습니다. 아무튼 여러분 감사하겠습니다. 계속 우리 방송을 시청해 주시면 좋겠습니다. 우리가 계속 매매를 할 테니까 좀 응원해 주시고 그리고 뭐 궁금한 사항이 있으시면 항상 댓글에 남겨주시고 그리고 좋아요, 구독 항상 눌러주시면 감사하겠습니다.
네, 청취자 여러분들 이번 주 한 주 너무 고생 많으셨고요. 정말 고생도 많이 하셨습니다. 그리고 주말에 푹 모두 다 즐거운 주말 보내시고요. 또 다 모두 에너지 리셋해서 월요일부터 또 멋진 방송, 또 멋진 매매 할 수 있도록 찾아뵙도록 하겠습니다. 감사합니다. 모두 힘내세요. 감사합니다, 여러분.
감사합니다.
That supports the whole PMI expansion over 50 in the March-April timeframe.
Hey, Tim, thanks so much. You know what? I'm going to give you an unsolicited room rater here. I mean, your room rater in the background, it's fine. But the fact is, you're in Miami, Tim. We should have the background be like the ocean or your yacht on the intercoastal waterway. So if you could work on that'd be great.
It's even better. I'm in Jupiter.
Ah, there you go. That's what I'm talking about. Golf course then. Tim Fiore, thanks so much for joining us. Chairman of the Manufacturing Business Survey for the Institute for Supply Management. Again, headline numbers not looking so great, but if you go under the surface, Tim's suggesting there's some strength out there. So appreciate this time. Let's see what's happening in the marketplace. I'm looking at the S&P 500. We're up 0.2%. The Dow's off fractions. The Nasdaq's up about 0.4. So it's a mixed day out there for sure. Maybe the market's going to deal with some of these ISM data points. The UMISH came in a little bit weaker. We'll see about that. Let's go to Norma Linda. She covers all of the markets for she joins us here in our studio in New York City. Norma, what are you looking at today in the markets?
Well, happy Friday. Let's take a look at Hewlett-Packard Enterprise. That's ticker HPE. And we do know that this is focused more on servers, whereas HPQ would is more focused on the PC side of things, but we are seeing these shares making a bit of a comeback after being down more than 5% earlier. HPE said that it cut its outlook for sales growth and profits, and of course we did have the CEO join us on Bloomberg Radio earlier this morning saying that the company is working on new use cases with AI, as well as saying that Juniper, its recent acquisition of last month, will be a terrific addition. But the company did narrow its forecast, its suggested EPS forecast for the full year. Some of this due to that cooling demand that we're seeing for networking products.
Yeah, we talked to him on TV also. That'll play out later on in the 3 p.m. hour. I mean, I was just really struck, like, Dell has a lot of AI stuff, and they're not having the same kind of issues, same with NetApp. So I did wonder, is it HPE's just behind, and they're playing catch-up, and that's why the shortage is really there? I mean, I'm wondering.
Well, on the Dell story, stock's up, you'll tell us a gajillion percent here, but I was surprised. I didn't think it was that much of an AI play.
Right.
I'm thinking Dell, PCs, that kind of stuff, but apparently their server business.
Right. And so it's funny seeing it here on the flip side when you look at the contrast here. As you mentioned, Dell is up and soaring as much as 39% this morning. That's its biggest one-day gain on record, as well as it touching its highest level in history.
I think a lot of people are like me. They're like, oh,
right.
Dell is an AI play. Let's pour into it. I'm not kidding. I mean, you look at a stock with that market cap trading up as much as it did. Michael Dell, he's number 15 on the rich list, RICH, going on Bloomberg Terminal, number 15 at $90 billion. He's now up 30% off.
Just amazing.
Also, if you don't want to buy Nvidia here, right? And then the ARM story is played out, and then I mean, like, MicroStrategy, okay, and then so where are you going to go? So it feels like now you can definitely go to Dell.
For sure. And if you look at the last 12 months, the stock has more than doubled. So we really are seeing people really rushing behind this company here. And of course, as we think about that AI play, that's where everyone wants to be.
And New York Community Bancorp, does anyone want to be there? New York Community Bancorp.
But we will talk.
Right. We have to talk about the laggards here. New York Community Bancorp, those shares are plunging as much as 31%. That is the lowest intraday level since 1996. And of course, we do that. This company just said that it identified material weaknesses in how it tracks loan risks. And of course, this company and regional banks in general really in focus much of last year. But many people are concerned considering this company's CRE exposure. But when talking to analysts, it seems as though a lot of people are saying that this may be an exclusive situation to NYCB, and so not necessarily to threat. So we are seeing a little bit of muted trading when it comes to KBW. I think that index is down about 1.4%. But we did have the company now coming out saying that material weaknesses are not expected to impact 2023 results, and that allowance for credit losses isn't expected to change. So it's like they're kind of beating their chest here, trying to keep up as everyone's got all eyes on this company here.
Yeah, more talk to Herman Chan from Bloomberg Intelligence. He's the go-to guy on this. We'll talk to him in just a moment. I'm also looking, do you guys see this? Some gambling stocks. You got Las Vegas Sands, Wynn. They're one of the worst performing stocks in the S&P. Apparently, Macau, it had a miss in terms of their gaming revenue after February, which is interesting. I wonder how that ties in, though, to their Lunar New Year and the holiday. Usually that would be a good time, right?
Yeah, I mean, I guess it's just relative to expectations. But, some of these names, the Las Vegas Sands and Wynn, are more exposed to Asia than they are to...
Do you like it, then you don't. And also, apparently, gambling revenue in Las Vegas and that strip fell almost 4%.
That's so interesting. I was going to say, the Super Bowl. I feel like we were writing stories about this.
I do my part out there. I think it's a good part of my wallet. Yeah, it's all about, you got the game stuff. You got Vegas.
We didn't talk about NetApp, though. I'm just pairing that because this is also kind of a Dell HPE story at the same time. That stock is the best performing stock within the S&P. They actually boosted their full year earnings outlook, which was pretty impressive. They also reported their third quarter net revenue that beat expectations as well. It's the same idea, right? It's like a storage thing.
Right.
AI mix is small, but they're all heading in the right direction. I feel like it's all a similar story.
Yeah, I mean, we did say, see TD Cohen, one of the analysts over there, saying that things are trending in the right direction, and that storage seems to be benefiting from customers making revisions to their data and architecture despite the continued budget scrutiny taking place at the enterprise level.
Yeah.
The chart on this thing, I mean, it's just another all-time high today. It's just there's another stock on the chart. It says the market's telling me here's another AI. Just bid it, buy it. I mean, you don't even ask me for it. Just go buy it.
What's so interesting about that is that I feel like we definitely saw that last year also. Like you say AI in your conference call, your stock went up, but then we we started learning that numbers were real.
Yes.
That like you could actually book and make money off of it.
Right.
It wasn't just a theory, and it feels like it needs a lot of credence to that at the same time. All right, Nora, thanks a lot. Really appreciate Melinda joining us and everything that's moving at Bloomberg. But to your point, 20% move in that app. Like it's not a $1 stock. Like Dell's an $84 billion company.
And this doesn't trade that way. It doesn't really these days. It says storage, enterprise storage. It's a software company. It's just got an AI seal of approval. And it's a 20% stock. That's it. It's been re-rated. It's been re-rated. It's now re-rated as an AI play. You just hope to get that. And the HPE folks have not gotten it.
Yeah, exactly. And that's a tricky spot. Okay, you're looking at the market. Let's take a look here. The S&P is up just about 0.2%. The Nasdaq up by 0.4%. A little bit of a bid in the bond market all across the curve there. 10-year yield down by 3 basis points.
breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News with this Bloomberg Business Flash. After yesterday's record close for the S&P 500, the NASDAQ, and the NASDAQ 100, the major averages today They are mixed right now. S&P 500 adding to its gains. It's up 12 points right now. That's up just about a quarter of a percent. 5,108 on the am I moving or is it here? The Dow Jones Industrial Average 14 points lower right now. The Nasdaq 100 up 93 points. That is up 0.5%. As we told you earlier, consumer sentiment falling in February for the first time in 3 months. Now, again, the major averages mixed, little change. S&P 500, 6 of the 11 major industry groups were higher. You have information technology, best performer. That's where you're going to find shares of, wait for it, yes, NVIDIA, up over 2%. Utilities right now, the biggest drag. NetApp, you mentioned that earlier, Alex. That's the best performing stock in the index. Up right now 23.2%. Data storage company boosting its outlook. And then at the bottom of the list, the worst performing Xcel Energy and Las Vegas Sands. Las Vegas Sands down just about 6%. Let's do yields real quick. The 2-year falling down 5 basis points at 4.56. The 10-year yield 3 basis points lower. And that's a 4.21. Tech markets for you all day long, right here on Business Radio. John Tucker, Bloomberg Business Flash. Paul and Alex.
All right, thank you so much, John Tucker. Here is another big loser for you, New York Community Bank. That stock now down.
Wait, so you go from me to another loser?
Oh, that was so mean. No, I meant because you talked about Excel and Las Vegas Sands and Wind. Wow, that would have been really tough. I would not be a good host. We go from a loser to another. Losing stocks. Another losing stock. New York Community Bank down 20%. All right, you know the story. It has discovered, quote, material weaknesses in how it tracks loan risks. They wrote down the value of the company it acquired years ago and replaced its leadership to help grapple with the turmoil. There was a theory that maybe this kind of risk was idiosyncratic. They are one of the big exposures to rent-controlled apartments here in New York City that has been hurt by a revamp of some of those rent control laws. So when there's a banking potential crisis, we go to one guy, Herman Chan, Bloomberg Intelligence senior analyst for U.S. regional banks. Herman, can we still call this idiosyncratic?
It is a good question. I think it's the appropriate question. What's idiosyncratic is you mentioned the exposures to commercial real estate, specifically apartment lending and office. But what's also idiosyncratic is that it recently cleared the $100 billion asset mark, which ushers in higher capital, liquidity, regulatory issues for the bank. And what's happening in our view is that it's easy to reach the big leagues of $100 billion. It looks like it's harder to stay there, right? And what we're seeing is that they're facing growing pains in becoming such a bigger company, and these lack of material weakness in internal controls just reflects that.
Change in management, that usually doesn't look good.
Right.
I guess that's contributing to the stock here today, but tell us about that.
Yeah, sure. So a few years back, the bank acquired another institution, Flagstar Bank, and the CEO of Flagstar Bank is now the CEO of NYCB. He was named the executive chairman back earlier in February once these issues became apparent, and it looks like the former CEO has been sidelined because of the need for new management.
Okay, so what's interesting is that if we rewind to when they were able to buy with Signature, some Signature assets, right? It was like, oh look, yay, they were the savior, etc. Is that are regulators gonna rethink what being a bank savior is in that circumstance? Like,
yeah, that's a great question, and I think it really poses a different question. Was New York Community the right bank to acquire the Signature assets and deposits? If the regulators should have known that New York Community wasn't really up to snuff, up to speed on a number of these internal issues, capital issues, liquidity issues, and reserve issues. So, do the regulators need to be more cognizant of what they're doing?
Fundamental investing lesson, which is concentration risk. this type of loan class, i.e. loans to rent-controlled apartments, that presents a whole level of risk, i.e. they're not diversified in their portfolio as much as maybe we would like. But I guess if you were an investor in NYCB, you knew that going in, right?
Yes, you knew that going in, that this was the bank that has historically focused on the rent-regulated apartment lending sector. They're the big kahuna in this niche business, and they've been doing it for decades. So that's not new. And you should have known that a few years back when New York imposed tougher rent regulations, that this was going to hurt their main business. So it's taken a few years for this to really bore itself out.
Also, maybe an investor should know, but the company also should have known. Like, that part couldn't have come as a surprise from that end.
No, but their risky controls, that's a real problem.
Exactly. And now they're trying to do, what is this, synthetic risk something? Like, what are they trying to do?
So basically they're
Anything
doing
with
this...
synthetic sounds not great, but
this
what do I know?
synthetic derivative transaction to help reduce their loan exposures and improve their capital. So it's one way to get rid of or improve their capital without actually selling the loans.
All right, for our listeners and viewers that are not exposed to New York rent-controlled real estate, talk to us about just the regional banks in general. What's kind of the feeling you talk to investors today? Are they warming up to this sector? I know it bounced off that October low.
Right.
But I'm not sure if that's a market bounce or people saying, I think I've seen the worst of these.
It's an interesting question. You're right that they bounced, but now a number of folks in the market are saying potentially no rate cuts this year, which would be viewed as negative for the regional banks, just because deposit costs have risen. You need
but no
lower
rate cuts because the economy's good and accelerating. So wouldn't that be good?
There's two things that weigh on that. Number one, there's not a lot of loan growth, and rate cuts would improve loan demand. And number two, elevated interest rates is bad for credit quality and being able to refinance the existing loans, and the decline in value in areas like office commercial real estate could hamper banks' credit quality.
So where are we on that commercial real estate risk? I kind of feel like it's a time bomb still out there.
Right.
And at any time over the next 2 or 3 or 4 years, maybe multiple times over that time frame, we're going to have Bank A or group of banks are going to call out CRE as a reason why they really missed, or they have to really up their reserves or something like that. Where are we on that?
Yeah, that continues to play out. We saw that with New York Community in the fourth quarter. We'd expect more of that going ahead in the coming quarters. That being said, the risk in our view is really relegated to the smaller banking institutions. We just looked at some data, which I think was pretty interesting. Since the COVID era, starting in 2019, the top 25 U.S. banks have grown their commercial real estate loans by only 2%, and then the smallest banks have grown their commercial real estate by 43%. So that shows me that really the risk is comprised largely in the smaller bank cohort.
That's interesting. So let me ask a question going back to the Fed cut. So if we don't get a cut for this year, let's just pretend game out.
Did that just come with Torsten or other people?
No, it's just Torsten, I think. I think a couple weeks ago, people were talking about the worry that we may have to have another hike because inflation was re-accelerating, but this is maybe the first I've heard of no cuts at all. So if that happens and there's no cuts, who's going to be under pressure? I mean, you mentioned the fact that a cut would help loan demand. So who's already seeing sketchy loan demand?
Right. So that's an industry phenomenon where we're not seeing loan growth across the group. The Fed puts out weekly data, and it shows that loans are down, quarter to date in commercial loans. So that's a big driver of the regional bank, the large regional bank balance sheet. So that's hampered. It's going to affect banks like probably New York Community the most, because any potential rate cuts would view as a savior for them, because then their borrowers could refinance at lower rates.
All right, Herman, thanks so much for joining us. Herman Chan, Senior Analyst for the banks, joining us here in our Bloomberg Interactive Broker Studio. He's not mailing in like most of PI management is. Here's a big redhead. WTI oil rises to $80 a barrel for the first time since November.
Yeah.
Wow. So John Tucker and
Well, speaking about a demand
not bueno.
push.
We go to fill up this weekend.
Under just right around 3, I'm going to say, at the Wawa.
Really?
36, yeah.
Wow, okay,
So-
I'm up 315, 320.
But
I
I think
guess that's just demand that goes to some of the economic data we're getting, suggesting that the economy is maybe stronger than expected, a la Torsten Slok, and you see it in a lot of places.
Also, there's weirdly still a refining pull. So refining margins are not great, but they're still refining products. Like they're still buying the oil to refine them. So they're still doing that, even though the product crack spreads are not that awesome. So there is that demand pull, but that could wane. But then again, I mean, this is what OPEC wants. What was that?
Crack spread. They call it crack because you're cracking hydrocarbon molecules when you refine. Is that right?
See, you can make fun of me, but you already know the answer to this. So it's like
it was an answer with a question at the end. Is that right? That's right.
But anyway, I would agree. Definitely more of a demand story. OPEC Plus also reducing supply there. Anyway, this is Bloomberg.
Let's get some news now with Michael Barr in New York.
Thank you very much, Paul. Alex, John, there were long lines of mourners in Moscow today for the funeral of Alexei Navalny. Vladimir Putin's most prominent critic died last month under suspicious circumstances at the Arctic penal colony where he was serving a 19-year sentence. The crowd applauded and chanted Navalny, Navalny. Congress is keeping the lights on, at least for now. Lawmakers have voted to give themselves even more time to come up with an agreement on spending for the rest of the fiscal year. Bloomberg government Congress reporter Zach Cohen is in Washington.
There will be a new deadline on March 8th and March 22nd to avoid the shuttering of federal agencies as lawmakers look to finish funding agreements for a number of domestic agencies. And so there will be a new bill next week that would fund the Departments of Agriculture, Transportation, HUD, Veterans Affairs, Energy, the FDA. All of those are coming for a vote next week, and then the week after would include some of the trickier agencies, including Defense, Homeland Security, and HHS. So Congress still has its work cut out for it, especially as President Joe Biden comes to the Hill to deliver his State of the Union address next week.
Bloomberg government's Zach Cohen. Speaking of that, a White House official says President Joe Biden will advocate plans to increase taxes on the wealthy and corporations, as well as to lower prescription drug prices in his State of the Union address next week. It all begins Thursday, 8:30 p.m. Wall Street time on Bloomberg. Iowa women's basketball fans hoping to catch Caitlin Clark at home Sunday night should be prepared to shell out serious cash. Clark has a shot at breaking the NCAA's all-time scoring record currently held by former LSU guard Pistol Pete Maravich. The game could become the most expensive in women's college basketball history, some tickets selling for over $6,000. Coming up, 24 hours a day, whenever you want it, with Bloomberg News Now.
headlines and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with his Bloomberg Business Flash. S&P 500 adding to its gains after yesterday's record close. You have NetApp. That remains the best performing stock of the index. It is right now up over 24%. A decline in consumer sentiment helping solidify bets on interest rate cuts from the Federal Reserve. So we're seeing decline in Treasury yields, the 2-year, which is more policy reactive. That's 6 basis points lower right now. That's at 4.55. Meantime, on the economic front, Berenberg senior economist Caleb Pickering views the U.S. this way.
All of the upside risks in the US that we would have been hoping for last year seem to be playing out on employment growth, on productivity growth, on demand. The government's getting away with a lot of good fiscal stimulus. It's a nice story at the moment for the US.
And then you have Dell Technologies, those shares soaring. They hit a record earlier. The computer hardware company reporting fourth quarter results that beat expectations. Demand for, yes, artificial intelligence servers driving momentum there. S&P 500, 11 points higher. That's up 0.2%. 5,107 on the index. The Dow Jones Industrial Average just turning green. It's up 2 points right now at 38,999. And the S&P NASDAQ 100, I should say, that's up 82 points right now. That is up 0.5%. And we'll check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Alex.
Thank you so much, John Tucker. I'm Alex Steele with Paul Sweeney. This is the Bloomberg Intelligence Radio Show. We bring you great analysis with all our Bloomberg Intelligence folks. 2,000 companies, 130 industries. You want to know about it, they cover it. We also like to give you a perspective of how to invest on a broader level, particularly on a day where the data might point to maybe we're going to get some Fed cuts. But then Torsten Slok of Apollo said you're not going to get any cuts this year because the economy is just actually accelerating. Things are too strong. So Anna Rathburn joins us now. She is CIO at CBiz Investment Advisory Services. Anna, do you agree with Torsten Slok maybe, or what's the case for no cuts at all this year?
I don't know about no cuts, but I think it's certainly difficult for the Fed to raise rates at this time, or at least looking out into 2024. And it's not just the inflation, it's their target of 2%. It has been really sticky. Sticky doesn't mean it's not falling. Sticky means it's falling very slowly and that it's very, very bumpy. So either the Fed is going to have to accept a higher than 2% inflation rate and call it maybe the momentum is heading down and start to normalize rates, or they may have to be higher for longer. That may be one cut, maybe two cuts, maybe no cuts. But I think no cuts is that's a pretty hawkish.
Well, he's certainly got some airtime, if nothing else, today. Anna, what do you think about this kind of soft landing scenario that seems to be out there? People kind of feel like the Fed's doing a pretty good job here negotiating a soft landing. Do you buy into that?
Well, I think you have to look at the underlying risks that are in the markets. I mean, there's the labor market, weakness in the fringes that we've seen. And this is sort of like, what would a recession look like if we didn't have external shocks? If you think about the last 3 recessions that we had, they all came from crazy external shocks. How often do you have a pandemic? How often do you have a global financial crisis? Maybe there's a tech bubble. I don't know. Depends on who you ask. But that was in the late 90s. These are sort of triggered by outside factors. If you have a normal economic cycle where you really have like a natural boom and bust, you're going to see weakness around the fringes. And I think we're starting to see that in the consumer's labor market as well as delinquency rates, et cetera. And you're starting to see some cracks in the markets, especially with New York Community Bank, right? I mean, that was news that came out. We started to see some cracks about a year ago. It's almost a 1-year anniversary. And here we are in 2024 talking about banks again.
So would that be a call then to sell the rally in small caps? Because what you're describing is really great for large cap companies and really bad for the small guys.
Well, I mean, I think the small caps have been telling us that it's been pretty uncertain.
But they've outperformed, Anna. In the short term, they have outperformed.
Yes, yes. So short-term, they've outperformed because the yields came down, right? So if we're talking about a higher for longer scenario, I mean, look at the 10-year today. It's falling pretty dramatically, and yesterday as well. I mean, small caps tend to like these things. But if we're talking about a higher for longer, we're talking about a pretty volatile rate environment where it can definitely go back up. And when it goes back up, it sort of supports that higher for longer narrative, and that's not as friendly for small stocks.
How about on the fixed income side here? I'm looking at, just a 2-year treasury, for example. It's pulling back today off of 7 basis points, but you're still getting north of 4.5% for a 2-year. How do you kind of advise your clients to think about the fixed income space?
Well, so depending on why you're investing in fixed income, I think that reason is very important. Look, I mean, yield is very, very attractive. And so even if you have some sell-off and some headwind on the price, there's enough yield there to cushion some of that blow so that we're not talking about the same environment as before the Fed started to raise rates, right? So we're less sensitive to price changes. So we do invest for yield, especially on the shorter end. And we are keeping duration a little bit on the shorter side because of some of the volatility that we were expecting on the longer end of the curve.
So is that a steepener trade then?
Yes. I mean, we're not.
Paul doesn't like that. He doesn't like to talk about steepeners. But because the steepener trade has been real rough.
Oh, yes, it has. And I think that's because every time the Fed comes out and says, well, we're thinking about cutting rates, we're thinking about doing this or that, I think the markets interpret that to be, okay, the Fed is going to be dovish, and the financial conditions loosen, and then it tightens again. I think it's that volatility that's very hard to stomach for some of our investors. So keeping duration a little bit on the shorter side to minimize some of that price impact is sort of our goal.
How about in the credit space here? Should I be willing to go out there and maybe take some credit risk in an effort to maybe goose up my yield here?
So we're talking about credit spreads, or are we talking about treasury yields? Because the treasury yields are very, very attractive. And of course, you put the credit spreads on top of that, it's even more attractive. But we are a little bit more careful on credit, especially on high yield. I believe our high yield is at the lowest that we're, in terms of percentage, that willing to go. It is still a very attractive yield. Again, there's some a cushion for some of the price volatility, but when high yield spread widens, that widens pretty quickly. There's a big price action there on the negative side that we don't necessarily want to participate in. So we're staying on the investment grade credit. As we all know, that market has been very, very healthy in terms of new issuance, in terms of demand, and so we are there at the moment. I can't tell you that we'll be there next month, but certainly for now, we've been clipping very nice coupon on that front.
Okay, so that's a good point, because so you're in the investment grade market, but that's for the coupon. In the treasury market, Are you there for price appreciation, or are you there for the coupon?
We're there for the coupon because, again, rates are so volatile that we sort of have to ignore it as noise for the time being, and we're there to clip the coupon. So we were there for a while now, especially after, let's say, in 2023, about halfway into 2023, we increased duration, we increased our fixed income exposure to participate on that yield. And a lot of our clients are actually looking for that yield, so that made sense for us.
So, Anna, the issue here is for a lot of folks is, what is our Federal Reserve going to do? And, again, there's a lot of competing calls out there, but overall, where do you think the risk profile for this market is? Do you think people are willing to take risk when you talk to your clients, or are they a little bit more risk adverse?
It's mixed. So there's definitely FOMO. But there are people who, especially small business owners, they see some of them see strengths, some of them definitely see weaknesses. And a lot of them tell us that this market doesn't make sense to them. So what is priced into the markets right now is a lot of optimism, including scenario where Fed starts to cut. And if that doesn't materialize, I think that the markets may be in for a surprise. And a lot of our clients are definitely thinking in that way. The valuations, the numbers don't sit very well with them. So certainly there's some fear, but there's always a push and pull between FOMO and fear, right?
Yeah. I definitely have some FOMO, but I'm also like soup cans under my bed kind of gal. So Anna, thanks a lot. Really appreciate it. Anna Rathburn, CIO at CBiz Investment Advisory Services. Stock's still up by about 0.3%, buying all across the curve. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
And I'm John Tucker with a look at some of your company news. And for this one, let's start off a little northeast of New York City. Darien, Connecticut. At a time when falling office values are creating turmoil, Darien, Connecticut making room for new shops, restaurants, and critically, office buildings for finance workers who got a taste of life without the commute during the pandemic. They realized they no longer want to make the hour-long train ride into Manhattan each day. So eager to keep the top talent happy, a bunch of firms are setting up shop or expanding into the town. Take, for instance, the insurance giant Aon, the investment firm Crestwood Advisors, and Janney Montgomery Scott, all taking new office space or building it. And then you had the bond powerhouse Cantor Fitzgerald, for instance. They more than doubled the head count at the Darien outpost since before the pandemic. An investigation published by Consumer Reports says some doorbell cams sold by Amazon and other online retailers have security flaws. So they could allow bad actors to view the footage from the devices or control them completely. Researchers from the product review organization say they found major vulnerabilities in cameras that are manufactured by a Chinese company, Ekin Group. They produce video doorbells under the brand names Ekin and Tuck, among others. Amazon has given the Ekin and Tuck doorbells its coveted Amazon Choice badge. And finally, taking a cruise with the kids, maybe. MSC's new luxury cruise line Explorer, built to bring the kids. They aim to be a sophisticated solution for luxury-loving families with caviar everywhere and kid care galore. This is a company that also makes, interesting enough, the container shippings, the containers. Maybe you put the kids there.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, happy Friday, guys. We made it to the end of the week. I'm Alex Steele here with Paul Sweeney. You're listening to Bloomberg Intelligence, where we have all our top analysts cover 2,000 companies and 130 industries all across the world. Let's get you now to Michael Barr for world and national news. Michael.
Thank you very much, Alex. Paul, John. Funeral services have been held for Russian opposition leader Alexei Navalny under a heavy police presence in Moscow. Bloomberg's Henry Mayer covers the Russian government from Dubai and has more.
Large numbers of Russians came out to pay their final respects, certainly thousands, and they waited for a long time, several hours, outside the church in southeastern Moscow, where a funeral service was held. And the funeral service didn't last very long. Only the family was allowed in. So all of these people who had been waiting for this long period of time were not actually able to enter. They then made their way to the cemetery.
Bloomberg's Henry Mayer reports riot police were stationed throughout. The Kremlin had threatened punishment for any unsanctioned gatherings. Images from the Texas Panhandle show a surreal landscape charred by wildfires as the Smokehouse Creek fire has devoured more than 1 million acres. At least 2 are dead, homes and other structures have been burned, and the loss of livestock is hard to calculate in one of the largest beef-producing areas in the nation. This Fritch, Texas resident was overcome by the destruction.
It's heartbreaking, not just for me and my family, but all the other families that have lost.
The Smokehouse Creek fire is still burning. It is the largest wildfire in Texas history and the second largest in U.S. history. A dangerous storm is on its way to California's winter resort region, bringing life-threatening conditions and a potential to dump more than 12 feet of snow. This truck driver was about to get back on the highways around Sierra.
I don't like that they got checkpoints for chains, like let people get on their way if we know how to drive. If you don't know how to drive, get off the road.
Wind gusts in some areas could hit up to 70 miles an hour. Global news 24 hours a day, whenever you want it. Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Alex, Paul, Jen.
All right, let's talk about some breaking news here. Stocks on the move. Boeing stock is down 1.6%. Spirit Aerospace Systems is halted. This comes as a Wall Street Journal report says that Boeing is in talks to acquire Spirit Aerosystems. Remember, Spirit Aerosystems is the jet fuel supplier, so they make the engines and stuff, the jet fuselage supplier. It split off from Boeing 20 years ago, but they're responsible for a lot of quality issues for the 737 MAX jets. They also supply stuff to Airbus. It's not like they only supply Boeing, but Boeing cannot let Spirit Aerospace fail because they have nowhere else to get the stuff, but buying it seems crazy after 2 decades.
It seems crazy, but you know what? Just not knowing anything about this industry, they need to do something just bold here if you're Boeing. You cannot have the existing situation continue at all because there are obviously some quality problems throughout their processes, which they've already admitted. And if they are, in fact, at Spirit, which a lot of people feel like a lot of those problems are at Spirit, you need to take control here, I think.
But I wonder, like, what would that solve all the problems? Because part of the reason why Spirit Aerospace maybe had some quality issues is because Boeing also pushed them really hard to deliver stuff and be cost effective for Boeing, which wound up hurting Spirit Aerospace in the meantime. So you kind of like, in some ways it was of your own making. I guess from that point of view, now you got to take responsibility in some respect. This would be huge though, I'd have to say. This would be a big deal.
Yeah, so Spirit Aerosystems is how it's reported. The stock is up 5.8% today. Trading is halted. So we'll see how that plays out here. But again, it would be big news there. And Boeing really, as we've said all along, and George Ferguson, who covers Boeing and the aerospace for Bloomberg Intelligence, has told us, this is you can't have any reputational issues in this business because you've got to be perfect.
Yeah, and I think what we also learn on this is that either way, Spirit Aerosystems is in deep trouble. And the journal is saying that they've hired bankers to explore options. So even if it's not Boeing, like they clearly need to do something, and that they're in a really stressful economic point. But yeah, I think like having a door blown off is not awesome. Like you don't want that. That's something that's you don't want in your life. Okay, so Boeing stock is down by 1.8%. Spirit Aerospace jumping all over the place. A pause for trading as well. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Joanne Shu, University of Michigan. They're out there, UMich data coming out today. Kind of weaker than expected. We're going to break that down with Joanne Shu. Then we did find George Ferguson, who covers the aerospace area for Bloomberg Intelligence. He's going to come on in this hour and talks about what's happening with Boeing and Spirit. Again, potentially, according to the Wall Street Journal, potentially some discussion between those two companies. It is Friday, which means we talk municipal bonds. You've been waiting all week for it. Alex, we're going to bring in Eric Kazaski. He does all the beauty stuff for Bloomberg Intelligence. And there's also a cool story out there. Truist, the Southeast Regional Bank, they're hiring a lot of the bankers, municipal bankers at Citi that go.
That's interesting.
When Citi, for some reason, I don't know, I guess, got out of the municipal bond business. Just crazy. All right, so that's all coming up this hour. But first, let's go to John Tucker and get a Bloomberg Business Round.
All right, we're looking green on the screen right now. The S&P 500 continues to push higher. Yesterday, of course, the S&P 500 notched its 14th record this year. NASDAQ and NASDAQ 100 also closed at all-time highs. A decline in consumer sentiment. You just talked about there, Paul, solidifying bets on interest rate cuts. You also throw into the mix Federal Reserve Governor Chris Waller saying he would like the central bank to boost its share of short-term treasuries. So that has sent yields lower right now. Goldman Sachs chief global equity strategist Peter Oppenheimer, he was on the air on Bloomberg earlier today. He thinks stocks can push higher still.
This very powerful rally, but it's come from a position where investors were quite worried about recession and inflation. Those fears are receding, and as long as the earnings continue to grow, we can see, I think, some upside to equities and better returns than in other major asset classes.
S&P 500 20 points higher. That's a 0.4%, 5,116 on the index. The Dow Jones Industrial Average up 43 points. The NASDAQ 100 up 123 points. This is a rise right now of 0.7%. Quick check of Boeing shares down 1.6%. U.S. crude prices hitting $80 for the first time in almost 4 months. NYMEX crude up 2.6%, 80.34 a barrel. And we check markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and it's Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, John Tucker. And just a quick update here. Boeing stock is down by almost 2%. Spirit Aerospace is now trading again. It's up by about 18%. This comes as a journal article says that Boeing is in talks to buy Spirit Aerospace. They also say that Spirit has hired bankers to explore options. We will keep you updated on that. George Ferguson joining us in just a second. In the meantime, let's get some more market movers here with Nora Melinda. She joins us in studio. All right, Nora, what you got? You were looking at, what, ADM?
Yes, Archer Daniels Midland. That's an agricultural trader, but it's really up a little bit right now. It delayed the publication of its annual report and warned that it anticipates reporting, quote, material weakness in the company's internal financial reporting practices. It feels like that's really the phrase of today when we think about NYCB as well. But investors did take a sigh of relief after it indicated that there won't be a broad impact on its overall earnings. We have shares rising as much as 3.1%. And this is the first update that ADM has really given since its shocking January announcement that it was placing its CEO, Vikram Luthar, on administrative leave pending an internal probe. So really interesting here.
All right, yeah, I mean, it's been a really tough time for ADM. They're going to have very limited visibility for a very long time. There's only a handful of these guys, so if one of them struggling, it's interesting what it does to the other parts of the industry. All right, you're also looking at Palo Alto Networks. What you got there?
Yeah, so we have those shares tumbling a bit, as much as 4.4%. Now, this company is getting hit with a class action lawsuit. The people are alleging that it misled investors with claims that new AI products were, quote, facilitating greater platformization. And it prompted a 28% sell-off, but these investors really do feel a little bit deceived about the traction of its platform tactics and hurt by an unexpectedly low billings forecast from the company that did end up crashing the share price.
It's tough when investors are hurt.
Yes.
When they're hurt, I mean, that always
Feel.
hurts them. How do you feel, investors?
Right.
All right, XL Energy, XEL is the ticker.
Yes, XEL, those shares are down as much as 7%. Now, this is the lowest intraday level since 2020, and this comes after, unfortunately, the worst Texas wildfire in history that wiped out both ranches and cattle. It is really, really bad. I believe at least one person died due to the blaze. But this is kind of coming back on Excel Energy specifically because a law firm that disclosed that it may be responsible for the damages, they're still trying to get to the bottom of what sparked this fire. And Excel is saying that it will cooperate with investigations as they try to progress on this. But the news actually made the stock drop and erase about $1.9 billion of its market cap.
We've seen this play out PG&E in San Francisco. We've seen Hawaiian Electric. What happened in Hawaii? Like, we've seen this story play. Nothing confirmed, but like this has been somewhat of a playbook. All right, Nor, thanks a lot. Norma Linda joining us there from Bloomberg. Let's get back to some of the eco data at the top of the 10. University of Michigan sentiment, the final read for February coming in a bit lighter. Current conditions revised lower as well, and expectations revised lower as well. We want to get to the bottom of it. Joanne Shu, University of Michigan Surveys of Consumers Director, joins us now. The revision lower, Joanne. What happened there?
Essentially it edged down just a little bit. It was not much of a change at all. And essentially we should interpret this as moving sideways between January and February. Essentially consumers haven't really noticed any material changes in the state of the economy since the start of the year. And that comes through in our data. At the same time, it's also solidifying the really enormous gains that we saw in December and January. We're still almost 30% above where we were in November. That hasn't really changed even with this little wiggle this month. So consumers feeling better than last fall, feeling about the same as last month.
I guess a lot of folks, Joanne, right now, given some of the inflation data we saw in January, CPI and PPI and so on, maybe concerned that maybe inflation's coming back into this economy. Are you seeing that in any of your survey work?
No, consumers broadly have felt pretty assured that the slowdown in inflation is going to continue. The data that these new inflation numbers came from comes from reflect consumers' experiences last month. It comes in at a lag, so consumers already notice those prices around them and any changes in prices. Last year we were seeing quite a bit of volatility, seesawing in inflation expectations in January and February, exactly the same.
So, Joanne, what are we going to be looking for the preliminary read then for March? Like, what are going to be like the standouts that you're looking at?
The main thing we wanted to look for in the months ahead is whether the 30% gain that we saw in December and January, whether that's actually going to stick, given how dramatic those increases were. So far, the February read confirmed that. Let's see if that stays put in March and April. And as mentioned, inflation expectations absolutely top of mind for consumers.
All right, very good. Hey, Joanne, thanks so much for joining us. Really appreciate it. Joanne Shu, Surveys of Consumers Director there at the University of Michigan. We had some data come out there today. Again, M&A talk just kind of coming across the tape here. Boeing in talks to buy supplier Spirit Aerosystems. Spirit Aerosystems stock is higher, Boeing a little bit lower here. But one could argue this is a transaction that probably needs to happen for Boeing to address some of their concerns. Let's bring on George Ferguson. George Ferguson covers the aerospace and airlines business for Bloomberg Intelligence. George, tell us why Boeing would want to do this transaction.
Good morning, Paul. Quality control. It's absolutely quality control. They must be looking inside Spirit. I know they've been looking inside Spirit for months. My guess is they've looked inside and they just feel like they can't control quality well enough. As an outsider, they used to own Spirit, not as it looks exactly now, but they used to own, those facilities. It makes a majority of the 737 fuselage. It makes the front portion of the 787, two extremely important products. I think they've looked inside and they said, We can't control quality well enough from the outside. We gotta buy this thing.
Do we trust Boeing to have the kind of quality control that Spirit needs?
Boeing doesn't have a choice. Boeing's got to get quality control, or they got a major problem on their hands. And so, I think, as an owner, I think it is the path, probably a good path forward. I do think they will get the quality issues in hand, but it's going to take some time. But they have to. They have no choice.
Yeah, I'm looking at the stock of Boeing, pretty much unchanged on the news here. If I were an investor in Boeing, I would think it may or may not make financial sense to own this Spirit thing, but I would say it's probably the best way to move forward here. When you talk to investors, George, do they think that way?
I think investors, I don't know that you could say they all monolithically think that way. I think if there could have been a way to keep it outside, not have to buy it, I think that probably would have pleased people more. I mean, there will be an unwinding required in this transaction, right? So Airbus's A320, some of the components are made Spirit. I'm imagining that Airbus is not going to be interested in having, Boeing as a subcontractor on their airplane. And there are other defense products, for Lockheed and things like that. It's going to require some work to unwind this thing a little bit in order to pull it inside of Boeing. Probably energy you would prefer not Boeing to spend, but again, I think it's their most important products are flowing through Spirit, and Spirit's been a source of the problems in some of those products lately. And if Boeing is going to much higher production rates, which is where they're going to generate the cash flow they need, the profitability they need, they've got to stabilize production. And I think they must have looked at it and said, we got to own it. And so if you're an investor, I think you're okay. Yeah, it's the way forward. I'd rather not have taken this path, but it's the way forward.
This is a leading question, and it could be very wrong. But does this tell us anything about how bad things are at Spirit, that this is the option?
I think it does.
So how bad are things at Spirit?
To me, it sounds like it's so bad they gotta buy it, and I think that's bad, right? If you're Boeing, you do want to preserve cash, right? You don't want to go make an acquisition. You got plenty of other things to manage right now, but I think it means that yes, the turnover at Spirit's been bad. The quality control, I think that's led to quality control problems. You want to have your hand in how those line workers are being managed, how the quality control is being handled. I think it means it was really bad at Spirit.
All right, the shares of Spirit Aerosystems, SPR is the ticker for your Bloomberg terminal, up 14% year-to-date. Trading has resumed here. So obviously, the market assigning pretty high probability that something will get done here. So George, just looking at Boeing holistically, as you've told us in the past, this is a scale business. You got to make as many planes as you can for that over that fixed cost base you have. Talk to us about the production goals, but talk to us where they are in production today, and where do they want to get to, and do you think that's a reasonable glide path?
So they are at 38 today, although they'll tell you even though their suppliers are building at 38 and delivering to Boeing at 38, Boeing's not putting 38 out. So I don't know, they're somewhere in the high 30s, let's say, depends what month it is.
That's on a per month basis, just in general.
And that's on the 737.
Yep.
That's their most important product. On the 787, we're in the I think 5-ish, 6-ish area right now. On 737, they've got goals to be into the 50s. They've and at the end of the last expansion phase before the pandemic, before the MAX crashes and groundings, they were in the 60s. They're not going to go to the 60s. Airbus is, for the 737, Airbus is talking about going to 75 for the A320. So I think if you and I were inside the Boeing management meetings and they told you where they really wanted to go, they want to be up there near Airbus, taking a 50-50 complement of this market. Is that the right place to go? Yes. They're talking mid-decade. Yes. Probably pulling Spirit inside. Timing probably had a lot to do with that too. They thought, look, how can we stabilize this the fastest? Because we don't want to keep giving away share to Airbus.
Going to Spirit, back to Spirit just for 1 second, we're also reporting that Spirit is exploring strategic options. So that leads me to believe that if the Boeing thing doesn't happen, they're still in deep trouble and they gotta get a buyer or do something else. What would be plan B?
For Spirit?
Yeah.
Yeah, I mean, when we look at Spirit's, Spirit has a bunch of debt coming due. The capital markets haven't loved them as much. I think some of the debt they've placed has been up in the 9%-ish levels. I think the debt capital markets especially, have looked at the Boeing relationship, and that's given them more comfort, probably to give them rates that perhaps were better than what Spirit should have got. I think it, frankly, would be strategic options, away from Boeing are really difficult because, again, some 50, 60, I'm talking off the cuff here, I'd have to go pull the exact number of their revenues flow through Boeing. What I'm guessing, and that strategic comment, is that Spirit is probably looking at how they would spin off portions of the business that are not Boeing focused, so that it can continue, to serve those customers. Like I said, Airbus, Lockheed, other defense companies have products that are being built by Spirit. I think they're probably looking at ways to continue to service them in an entity that would be outside of Boeing. The fuselage building business, which is largely what Spirit does, isn't one of the great money makers in the industry. And, we've seen it go to some, to go offshore. The Koreans want to be in this business. The Japanese are in this business. The Chinese are in this business. There's a lot of competition in that space. And so I think it makes it a really hard part of the business to be in to make very good returns. And look, it's a space, the fuselage building space, that I think Airbus has kept more inside because, again, they want to control the quality. So, I guess that's a long way of saying I don't know that options as a complete entity away from Boeing, I don't know that great ones exist, and I don't see that. My guess is they're trying to spin parts of it away.
All right, George, thanks so much for joining us on short notice. Really appreciate it. George Ferguson, he covers the aerospace business as well as the airlines, the whole complex over there, including the defense manufacturers. Wall Street Journal first reported, now Bloomberg News matching, that Boeing is in talks to acquire Spirit Aerosystems Holdings. SPR is the ticker. Spirit the stock is up 15.5% today right now. So suggesting the market believes that there is something there. And as George was suggesting, Alex, it's probably something they got to do.
George was awesome.
Yep.
Like, that was great. That was great perspective, etc. Yeah, and I thought that it was really interesting that it's the fuselage business, so if you can spin off other stuff, maybe that's the profitable moneymaker. You can still keep the contracts with Airbus and Boeing, but it's the fuselage business. Like, that's the part that Boeing just has to basically absorb and suck up within its company. We'll see if that works. You got Spirit Aerospace Systems is up by 16% right now. Boeing is down by about 0.6%. A big potential deal in the
headlines and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker of the Bloomberg News with his Bloomberg Business Flash. Stocks pushing higher after yesterday's record close for the S&P 500, the NASDAQ, and the NASDAQ 100. Boeing shares, we'll recap that. Right now, they are down about 0.5% on the news. They're looking to buy their supplier Spirit Aerosystems to institute basically a quality control. As Spirit Aerosystems, those shares, they're up 15, close to 16% on the news. Eli Lilly shares up over 3%. Analysts at Bank of America say Eli Lilly has room to run up another 30% this year on the promise of new markets for its weight loss shots. 8 of the 11 major industry groups in the S&P 500, they are higher right now. You have energy, a best performing group as crude oil tops $80 a barrel. Overall, the S&P 500, 24 points higher. That's up 0.5%. We're at 5,120, on course to set another record close. The Dow Jones Industrial Average, 54 points higher. That's up about 0.1%. We're at 39,051 on the index. The NASDAQ 100 up 154 points. That's up 0.9%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
Now on Bloomberg Intelligence, Munis in Focus.
All right, it is Friday. That means we talk municipal bonds, and the focus on munis is brought to you by Build America Mutual. Build America Mutual insures U.S. municipal bonds that finance essential American infrastructure and provides guaranteed income to improve any portfolio. Be part of Building America. Invest in BAM.
BAM.
Insured
Come on,
bonds.
Alex.
There we go.
Get with it.
Bam?
No, BAM.
Yeah.
Bam.
You know, I thought she was going to pull a Matt Miller and just kind of walk out of the studio.
Well, she
That was
kinda-
No,
she
I
kinda did.
will, okay, in the commercial break, but I want to learn and I will be as excited as John Tucker about munis by the time
The
my time
performance is,
up.
I tell you, munis are performing well. Eric Kazatsky joins us. He knows this. He's a senior municipal strategist for Bloomberg Intelligence, joining us from the Princeton HQ via Zoom. So, Eric, talk to us about some of the performance we've seen in the municipal bond market this year.
Yeah, I mean, it's been surprisingly strong. So the last 3 years, negative February returns. And I will say we were probably on the side of more caution coming into February, thinking that it was probably going to be the 4th month in a row that we had, red on the screen when it came to rates, especially munis. They pulled a rabbit out of a hat, I have to say. So total returns for the month of February, 0.13%. On an absolute basis, not blowing the world apart, but on a relative basis compared to treasuries, they outperformed them by 144 basis points, which is the largest margin of winning versus treasuries since 2015.
Does
So
that
really
continue?
a feel-good story.
Eric, can that continue?
Absolutely. So really the biggest things I think that are going on in our market are softer supply coming in and just really a palpable fear of taxes. People think tax rates are going to go higher. That leaves munis as one of the only games in town.
Yeah, I mean, I'm just looking at a Bloomberg News story. Biden will push higher taxes for the rich in State of the Union. That's got to be.
I'm so
good for
surprised.
flows.
What?
What's the?
Exactly.
Will somebody give me a definition of what rich
Yeah,
is?
I don't know.
Depends on, well, as we learned, you get into that 1%. In Monaco, you got to get like 12 mil
Yep,
or
that's
something
right,
like that
that's
for your
right.
net
Yeah,
worth.
it's
So
all
it just
relative,
depends.
You're rich in spirit, John. So you got that going for you. So talk to us, Eric, about, again, taxes go up. That's got to be good for flows for munis.
Yeah, I really do think that that's probably going to be the thing that sort of tips fund flows to really start coming in. On the mutual fund side, we're still seeing positive flows coming in on the ETF and separately managed account side because of cost, and people are being cost mindful. But I think that if we, either have higher corporate tax rates go up, and that bleeds into higher prices and inflation keeps going, it's going to keep the Fed on pause even longer, and eventually they're going to have to raise federal taxes.
So if they don't, though, let's just gain that on the. Is the reverse true? Like if taxes don't go higher, do munis make less of a good investment versus the flip side?
No, let's just say that we have a Trump win in the election, and we have an extension of Tax Cuts and Jobs Act provisions, right? We already know what's going to happen from a tax standpoint. We're living in it right now, and muni demand is fairly strong, I would say. And on a tax equivalent yield basis, they make a lot of sense still, especially where tax rates are.
All right, so talk to us just about some of the new issue market. How does that look these days?
pretty robust. Look, we look at a website, MuniOS, to sort of get a sense of what's coming into the market, and there's probably been upwards of 10 billion in new deals added to their preliminary calendar over the last week, which is definitely what we want to see. Is the market primed to absorb that much volume? I guess we're going to find out. We're hoping that the demand side is still there. I think it will be.
I mean, we've seen definitely a lot of takedown for the auctions for the Treasury market, so clearly there is demand. Here's a weird question. Aside from the tax point, is it a price appreciation play if you buy munis, or is it a yield play? Because it does feel like that conversation is kind of starting to trickle out a little bit within the bond market.
I think definitely for our market, I would say more of the conversation should be held around carry and how much you're actually paying to get that tax-exempt income.
All right, so talk to us about some of the, are there any concerns out there in the muni space? Anything that's blown up recently? Because I haven't seen really much of anything about. We haven't seen anything out of it, the Illinois of the world, the Puerto Ricos of the world recently.
Yeah, it's really a slow burn. And I think the things that are going to be a more meaningful story, let's say 10 months from now, a year from now, are really going to be surrounding commercial real estate valuations and how a lot of these cities and states are going to fare once they're totally off of the COVID stimulus funds. And that is quickly coming to an end for a lot of places. We're seeing a big uptick in local news stories talking about budget deficits for school districts. And I think that's really sort of the canary in the coal mine as far as where municipal credit might be a year from now.
And then we have all these natural disasters, right? We have Texas on fire. I don't actually know why that's happening, but then there's a life-threatening blizzard apparently that's going to slam California this weekend.
12 feet.
They're not built. What?
Go to the webcam
for
the Truckee Airport. The live webcam. It's like breathtaking the amount of snow they get.
I mean, but they're not set for that, right? Like if we get 12 inches, that stinks, and maybe we shut down for about a couple days or whatever. But you can manage it. California, definitely not. Do these kind of disasters lead to more issuance? How does that affect states?
Yeah, so I mean, it's really a twofold argument, right? You're talking about a one-off disaster like a wildfire, right, as opposed to more of a climate change nuance conversation. So I think on the climate change conversation, yes, over time that should lead to more issuance as cities like Miami want to invest in seawalls or sort of water mitigation issues, especially like New York as well, right? Same sort of thing. When we talk about one-off issues such as like a hurricane or a wildfire, I think we could point to the resilience in municipal credit and say that we've never seen a default or a decline in credit quality come from a natural disaster. So, until we see it, I can't really say for certain that we're going to see something happen like that.
All right, Eric, in a related story, we were talking about Citi pulling out of the municipal bond market, which I think is just, I understand Jane Fraser's got to boost returns, but getting out of, they're just, when I think of municipal bond market, I think Citi is one of the leaders here. But in any case, they shut that thing down. Truist, which is a southeastern bank formed by the merger of SunTrust Banks and BB&T in 2019, and said, hey, let's call ourselves Truist. That makes sense. Anyway, they're hiring a bunch of these Citi municipal bankers, and that seems like a good deal.
Yeah, absolutely. Look, I'd love to see it, right? You want to see these guys quickly get off the sidelines and back into the banking world, right? And build that pipeline of deals coming into our market. I think there was a lot of chatter right after Citi announced that they were leaving the business, that there was going to be this liquidity void and what's going to happen with supply. And look, we've seen nothing but a bunch of articles talking about how all these Citi bankers were snapped right up and Citi traders going to different shops. So I think everything is going to be fine in our market. I really do.
Yep. All right, Eric. Always good to chat with you. Eric Kozatsky, Senior Municipal Strategist, Bloomberg Intelligence, via Zoom from Princeton, New Jersey. And John Tucker mentioned this Truckee Airport cam. I've got it up and running here. And the snow's coming down, and the snow plows are out there going nuts. But it seems like every time they go down and clear part of the runway,
who's going to land at that airport in a wicked snowstorm?
That is really bad.
I mean, they plan an airport. I mean, I don't know what the elevation of this thing is. It's got to be around 10,000 feet up there. It's just extraordinary.
I will tell you, that was one of the most frightening experiences I've ever had. I drove from Reno up to Lake Tahoe. It was beautiful in Reno. I get up on 80 in the Sierras, and a snowstorm like I've never seen before. Thankfully, I made it, but there was a time that I just didn't think I was going to make it.
I'll tell you, it is. I used to ski there a lot at Squaw Valley, which I don't know if they renamed it here, but Squaw Valley right there in Tahoe, and coming up from Carmel, California, you go from sea level to 10,000 feet in 40 miles. So you just kind of go up on Route 80, and it's crazy hills. So they have chains. They have to have chains. You pull off on the side of the road. You rent chains if you don't have them. They'll rent you chains and get them, and they won't let you go any further without chains.
But that's kind of my point, is that they know how to deal with that. Like, you might not, but they do. How many snowplows are in California?
No, up there in the mountains, they really know how to do it.
Okay, they do.
They do.
Okay, but what about like San Francisco or
They-
like
they-
LA?
They just dump on rain. They get the rain.
So they're not gonna get the snow.
No, the snow's only up in the mountains. Only up in the Sierra Nevada.
When the Pacific moist air comes off the Pacific, hits the mountains, it goes way up, and as soon as it hits the peaks, it turns into precipitation.
So the way the forecast is there for the locals is, where is the snow? 2,000 feet, 3,000 feet, 5,000 feet. That's kind of what you look for when you see 2,000 feet.
Okay. Because I'm thinking like you're in LA on a beach and all of a sudden there's 12 feet of snow. Like that's not the thing. Okay. Okay. Well, that makes me feel a little better.
Now
That
you-
was gonna be like that.
and
was
you've
very
also
fun.
you disclosed you've not been to Los Angeles.
You have to think about that.
Now you've been to Houston a lot to see.
I've been into Houston a lot. Also, I gotta be honest, I hate the flight. Like going there is fine, but coming back, the stupid red eye, the overnight, forget it.
I haven't done a red eye since it's in my contract. No red eye.
I'm not doing it. Paul's a contract. It's because he's fancy.
S&P 500 up 0.3%. The Dow Jones absolutely unchanged here. Nasdaq up about 0.6%. So just a kind of a quiet day here for at the index level. S&P and Bitcoin is now trading a little over 61,000. With our news in New York City, here's Michael Barr.
Thank you very much, Paul. Alex John, former President Donald Trump is in a Florida courtroom today for a hearing in the classified documents case. Special counsel is proposing a new July date for the trial. Trump's lawyers argue the case should be dismissed, claiming presidential immunity. It's an argument the Supreme Court may decide this spring in Trump's federal election interference case. The border is quickly replacing the economy as the most important issue for American voters. Bloomberg's Ed Baxter reports the presumed presidential candidates are paying attention.
Both President Joe Biden and Donald Trump visiting the border, two different locations and both blaming each other. Trump at Eagles Pass.
People from places unknown, from countries unknown, who don't speak languages. We have languages coming into our country. We have nobody that even speaks those languages. They're truly foreign languages. Nobody speaks them.
Biden at Brownsville.
Folks, my first day as president, I introduced a bill I sent to Congress, a comprehensive plan to fix the broken immigration system and to secure the border. But no action was taken.
Trump calling it a Biden invasion. Biden saying the Congress and Republicans must act. Ed Baxter, Bloomberg Radio.
Russian opposition leader Alexei Navalny's funeral took place today in Moscow amid a heavy police presence. President Biden and European leaders blamed Vladimir Putin for Navalny's death in a remote Arctic prison. The Senate passing another temporary measure last night to keep the government running and avoid a partial shutdown. Senate Majority Leader Chuck Schumer.
What we have done today has overcome the opposition of the MAGA hard right and gives us a formula for completing the appropriations process in a way that does not shut down the government and capitulate to extremists.
To keep some parts of the government open until March 8th and the rest through March 22nd. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg.
Headlines and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We are brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Right now, the major stock averages, they are higher. S&P 500 adding to its record close from yesterday. In the lead for the S&P 500 shares of NetApp, they're up 23.5% right now. Traders also sifting through the latest remarks from a bunch of Fed speakers. Chris Waller is saying he'd like the central bank to boost its share of short-term treasuries. So that has helped push the more policy-reactive two-year yield 6 basis points lower. Right now we're at 4.55. Avery Sheffield of Rockefeller & Company on the program earlier today worries that stock valuations may be stretched.
With the NASDAQ 29 times, with S&P, nearly 21 times, with real rates, the highest they've been since the GFC, there's a lot priced in, and so I think what it means is that when expectations aren't met, the downside can be very meaningful.
Right now, the S&P 500 20 points higher. It's a record, 0.4% higher, 5117 on the index. The Dow's up 15 points. NASDAQ 100 keeps on this pace. It's going to be another record there. That is up 147 points, 0.8% higher. Just to recap the top story, Boeing in discussions to acquire Spirit Aerosystems Holdings. That's the contractor that makes the fuselages. Boeing shares down 1%. Spirit is up right now close to 16%. And New York Community Bancorp shares, also one of the standouts today. They are down another 25 to 26%. They discovered material weakness in how they track loan risk, writing down the value of companies acquired years ago and replacing leadership. We check the markets for you all day long, right here on Bloomberg Radio. John Tucker, that is your Bloomberg Business Flash. Paula Alex.
All right, thank you so much, John Tucker. So to another company we go, HP Enterprise. So basically, HP does the computer stuff, and HP Enterprise does the software stuff, if I just break it down like that. They have a little bit of AI exposure, but they're really exposed to IT and networking demand. So the stock did some interesting things. Reported earnings, it disappointed the street. It opened much lower. It had a big gap down from yesterday's close, but now it's up by about 1.8%. And this is why we love Bloomberg Intelligence, because we can call up these guys and say, what's going on with the stock? Explain it to me, please. And that's exactly what we're going to do with Woo Jin Ho, Bloomberg Intelligence, a senior technology analyst. This is so weird because Wells Fargo also downgraded the stock, and the stock's up. Well, what's going on here?
Yeah, hey Alex, thanks for having me on. So I think that a lot of the bad news was baked into expectations. If you look at the forward PE, it's at 8 times. That's bumping closer to the bottom, right? So heading into the print, I think people were expecting that the networking business was going to be weak and down. It was no big secret, especially given how poorly Cisco has done. And that's exactly what HP did. I think what's happening, though, is that people are starting to get a little bit more optimistic on their traditional server and storage business, and they're anticipating a strong second half growth. That number one, and then number two, preservation of their EPS on the low end. So they're happy with that as well.
Earlier this morning, Tom Keene and I spoke to Antonio Neri, the CEO of HPE. He seemed pretty positive on the outlook here. How are you and the industry thinking about this company's prospect over the next 12 to 18 months?
Sure. So let's move past the HPE and what Antonio said. There are a couple of data points that kept us late last night. Dell actually had some favorable server. They expect server growth. NetApp, which is a peer, they're expecting some stability as well as growth in their storage business. And then just the other day, Pure Storage is starting to pick things up as well on demand. So, there's some green shoots of recovery for the traditional business. And then add to that, you start sprinkling in some of that AI pixie dust to help complement some of that growth.
I should point point out that Woo Jin-ho is also the guy that both Paul and I would email and be like, hey, we got the CEO of HPE on. What do I ask him?
Yeah, thank you for that.
Yeah, thanks for those questions. Because we also interviewed him for TV. We appreciate that. So you say the AI Pixie dust. Does that imply that like it's not a real thing, or it's just not real in terms of material revenue yet? What does that mean?
Well, it's still fairly well. To be fair, HPE had a very long history of supercomputer business with Cray, and what you are starting to see is that the enterprises are starting to pick up demand on the AI front of sales. Right, there was one big deal that slipped out in the first quarter, which disappointed, but we should start seeing more deal flow and deal activity coming into HPE's AI businesses going over the next couple of quarters, especially in the second half. And there's a couple of things that are going to help drive that. Greater availability of GPUs, and that's been the big bottleneck on the AI server sales, not only for HPE, but also for someone like a Supermicro, which is a mid-cap server name, as well as Dell, right? They probably could have had better guidance. Dell in particular would have better guidance if there was greater availability of the GPUs.
So you mentioned Dell here, Wooj. I'm looking at the stock. It's up, about 27% today. And what that tells me for a company with an 85 billion market cap company is a lot of people like me woke up today and saying, oh yeah, Dell's exposed to this AI spending cycle with all their servers. I wasn't really aware of it. I kind of thought of Dell as a PC company, but they have also got this server business. Why is the stock up 27% today?
So, two words. Triple tailwinds. Right? Right? So the PC recovery cycle is starting and should better materialize in the second half of this year. You have the server, the enterprise IT spending start to pick things up. So modest growth on their server and storage business as well, as we discussed with HPE. But also you have roughly $3 billion in AI server sales in 2020, fiscal 25 or calendar 24. That's up from roughly zero in last year. So you have $3 billion in incremental sales that they didn't have, and that momentum is going to continue into 25 and 26. So there's a lot of excitement around AI servers.
I mean, yeah, I feel like that's definitely an understatement. It's just a matter of like how you wind up playing it. So in a weird way, like is HPE a good play because they haven't been able to deliver the kind of numbers that its peers have?
Yeah, so if everything starts working together, right? Let's say the networking business starts getting back on track, then the server business starts to get on track, then you could really start seeing the benefits of the AI business positively affecting the valuation multiples going forward, right? And then on top of that, you got this Juniper deal that they're going to close at the end of this calendar year, and networking valuations are typically higher than traditional hardware valuations, let's say 13 to 15 times versus 8 times. So, I think investors may be looking at the valuation right now, and it's a value company, and they may be taking a flyer at HPE, especially given that a lot of bad news is baked in.
All right, Wooj, thanks so much for joining us. Woo Jin-ho covers a lot of the technology stocks for Bloomberg Intelligence, part of that great tech team we have at Bloomberg Intelligence. I'm looking at Rich Go, RICH. Michael Dell started the day number 15 on the list in terms of the wealthiest folks out there. 90.6 billion. He's going to go up a few slots today. This is a stock which is a very large shareholder. Is going to be up, probably looks like it's up in the mid-20s right now. So it falls up into the somewhere in the high single digits.
But still, I look at Rich Go and I look at everybody except for number 3, Bernard Arnault. It's all tech.
It's all tech.
I mean, they probably own other stuff. Well, I guess Warren Buffett.
And one of the names that really jumps out at me is Steve Ballmer. He is number 6, $142.9 billion. He is basically right in line with Bill Gates. Now, Bill Gates has been a net seller of Microsoft stock over the decades from the years going forward. Steve Ballmer, not so much. Not a big seller. He's just held on to it. He said, boy, this was a good investment. Now, Steve Ballmer hasn't worked at Microsoft for a couple of decades, but he's basically held on to his stock, and it's just kind of right up. So he is a number 6 in the world. And, oh, by the way, he's up $12 billion just this year. So that's why he can afford the arena.
There you go.
$2 billion. We'll have more coming up. This is
Now, your company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom with a look at some of the company news. Let's start off with Elon Musk suing OpenAI and its chief executive officer, Sam Altman. He alleges they violated the artificial intelligence startup founding mission by putting profit ahead of benefiting humanity. The billionaire is also, of course, the co-founder of Tesla and of OpenAI. No longer has a stake, though, but he says in the lawsuit filed late yesterday in San Francisco, the company's close relationship with Microsoft has pretty much undermined the original mission of creating an open-source technology that wouldn't be subject to corporate priorities. Musk has been among the most outspoken critic of the dangers of artificial intelligence. This just broke a little while ago. CVS Health and Walgreens Boots Alliance, they plan to start selling the abortion pill mifepristone to patients with a prescription in certain states. CVS saying in a statement that the drug is going to be available in Massachusetts and Rhode Island in the weeks ahead. The company will then expand to additional states where allowed by law. Walgreens saying it's beginning to dispense mifepristone in a phased rollout starting in select locations in New York, in California, Pennsylvania, Massachusetts, and Illinois. And this is from the Journal, and I'd like to quote Ferris Bueller, who once said, "If you have the means, I highly recommend it." This is a Swiss, not really company, but a Swiss chalet-style mansion in Aspen has sold for $37 million. The seller, Bob Olson, chief executive of California-based R.E. Olson Development. It didn't say who the buyer not anything like the ski chalets I stay in.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Friday, everybody. I'm Alex Steele alongside Paul Sweeney. You're listening to Bloomberg Intelligence Radio. We have all our analysts covering 2,000 companies in 130 industries worldwide. We want to get you caught up now on world and national news with Michael Barr.
Thank you very much, Alex, Paul, John. Thousands turned out today in Moscow as funeral services took place for Russian opposition leader Alexei Navalny. He died mysteriously last month in a Russian prison. Bloomberg's Henry Mayer covers the Russian government from Dubai and has more.
The Kremlin spokesman Dmitry Peskov warned earlier today against any unsanctioned gatherings and said that the authorities would take action under the law. We've not seen any reports yet of any arrests. I mean, the police presence was very heavy at the event. Riot police were there in quite large numbers, but so far they appear to have taken the decision just to allow it to proceed.
Bloomberg's Henry Mayer. There are conflicting stories about yesterday's events leading up to the deaths of more than 100 Palestinians. The Associated Press reports, according to health officials in northern Gaza, witnesses say Israeli soldiers guarding an aid convoy in Gaza City opened fire on Palestinians racing to pull food off the trucks. Israel says many of the victims were run over by the trucks and that troops only opened fire when they felt endangered by the crowd. IDF spokesman Peter Lerner.
A large amount of people were going on the trucks and looting them and trampling and crushing one another. And indeed, many of the people that were injured or wounded or even killed were as a result of the truck movement.
Press Secretary, Air Force Major General Pat Ryder says the Defense Department has repeatedly stressed to Israel the need to minimize civilian casualties.
We're going to continue to work with partners in the region to try to ensure that humanitarian assistance can be delivered, while at the same time communicating with our Israeli partners the importance of taking civilian safety into account.
Major General Ryder says the White House is asking for an investigation. The Senate passing another temporary measure last night to keep the government running and avoiding a partial shutdown. Keep some parts of the government open until March 8th and the rest through March 22nd. Global news 24 hours a day and whenever you want it. Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, Alex, John.
Michael Barr, thank you so much. We appreciate it. Alex, it's going to be a big weekend on the Jersey Shore this week, particularly for those of Irish descent. The St. Patrick's Day Parade will be held this Sunday, March 3rd in Dublin. Big.
Now, okay, just back it up. Isn't that in 2 weeks?
It's in 2 weeks.
Okay, so I literally don't understand. There's going to be celebrations.
But it gives you the opportunity to celebrate not one, but two, maybe three or four St. Patrick's Day parade things.
So how big a deal? Like what happens?
It's huge.
It's huge. People from all over the region come in, and there's tends to be a high concentration of Irish Americans in that part of the world, and it just has become such a big, fun parade that towns from all over, some of the firefighters, trucks, and all that kind of fun stuff.
But they also send those because of all the people that are drinking in bars 24 hours.
Now, to be clear, you don't have to drink to have a good... What the hell am I saying? Stop me, Paul.
Look at John. Go over there. So no, it's a big deal. And
take the train.
Take the train.
Certainly not drive. Or Paul's going to do his
ride my
bicycle.
Ride your bike?
Because he lives down there.
You're going to ride your bike. Yep. You're going to do the thing. You're Irish, right? So you have to,
are you actually marching? Are you on a float?
No,
the Bloomberg float?
Oh my gosh, can we do that?
The Bloomberg float. That's a good idea.
Bloomberg Intelligence float.
Yeah, let me make a phone call here. I think I know a guy. So, it's going to be fun. The weather's supposed to be decent, but the St. Patrick's Day celebrations start too early.
I'm still just amazed. Like 2 weeks early, here's an excuse to drink. So did they dye the beer green and stuff, or we don't do that?
At the end of there's no drinking in the parade per se.
Sure.
At the end of the parade, you kind of end it with kind of elevators, great establishments in the town.
And it's a huge boost for the local small businesses there. So.
Okay, I'm not gonna. Okay, well clearly now I have to support it because I like these small businesses.
Yes, that's it.
So now
that's your excuse.
Now I can't make fun of it or anything for celebrating it 2 weeks early. Green beer.
So hopefully you guys all have a good weekend. That's where will be happening in the Jersey Shore. Balance of Power with Joe Matthew. That starts right now.
the world of politics to the world of business. This is Balance of Power. Live from Washington, D.C.
The government will not shut down today, but that's about all I can tell you. Welcome to the fastest show in politics as lawmakers head home after passing a 2-week extension to avoid a shutdown today, leaving big questions about the budget, funding for Ukraine and Israel, and Washington's ability to function. We'll be joined ahead by Bloomberg's White House correspondent Michelle Jamrisco from the North Lawn with a live report and analysis this hour from our signature panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. And later this hour, a special conversation with retired Army General Ben Hodges. Former Commanding General, U.S. Army Europe, is with us in studio with an eye on Ukraine. And as always, we've got a lot to talk about. We start, as ever, with a look at Wall Street. We get to trading right now in New York with Charlie Pellet.
Thank you very much, Joe Matthew. Indeed, I got plenty to talk about. Right now, we are on track for another winning week for the U.S. stock market with the Dow, the S&P, NASDAQ all advancing right now. S&P very close to session highs. Bonds climbed as disappointing factory data and a decline in consumer sentiment solidified bets on interest rate cuts. Right now, we've got the 10-year yielding 4.21% with a 2-year at 4.55%. The Dow, the S&P, NASDAQ all very much in the green. S&P up 21 right now. We are trading above 5,100, 51.18, up 0.4%. Dow Industrials up by 30 points now, up 0.1%. NASDAQ, the composite index, up 104, up 0.7%. Spot gold up $37 the ounce now to $2,081 for gold. That is a gain of 1.8%. Crude oil now with an $80 handle. WTI at 80.67, up by 3.1%. Sources tell Bloomberg Boeing is in discussions to acquire Spirit Aerosystems Holdings, its struggling former unit at the center of numerous quality issues affecting 737 MAX jets. George Ferguson is a senior aerospace analyst with Bloomberg Intelligence.
They used to own Spirit, not as it looks exactly now, but they used to own, those facilities. It makes majority of the 737 fuselage. It makes the front portion of the 787, two extremely important products. I think they've looked inside and they said, we can't control quality well enough from the outside. We've got to buy this thing.
Ferguson was interviewed last hour on Bloomberg Intelligence. Right now we got Boeing shares down 1.4%. Spirit Aerosystems is surging 10.5%. Again, recapping stocks higher. S&P 500 index up now by 21 points, up 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you. Welcome to the Friday edition. Balance of Power. You made it to the threshold of the weekend. And we're not going to be wondering all weekend about what happens with a continuing resolution because they passed one. Let's just get that right off the top here. After we spoke yesterday, the House voted and the Senate got its job done late last night or late in the day so everybody could get on an airplane and get out of town. 24-hour work week after a 2-week recess, and what we got for ourselves is a 2-week reprieve. So we'll be talking about this again when we come back next week, just as the president is winding up for the State of the Union address. That's next Thursday, following Super Tuesday. So this is going to be quite something with a lot going on and testimony from Jay Powell sandwiched in between. Now, by the way, with the way this works, we could be talking about the beginning of a shutdown a week from today. That's how much time we got in our laddered CR here, so it's the 8th and the 22nd we're looking at. And if you're not confused, you're better than I am. So Joe Biden's back from the border, and as he puts the finishing touches on a State of the Union address that, as I read on the terminal, is expected to call for higher taxes on the wealthy, more relief for the working class. It is unclear if he will be able to tout a ceasefire in Israel. Remember, that was the hope. As he said, hopefully by Monday we'll have this done. And that doesn't mean that it can't happen by Thursday, but with what's happening on the ground right now in Israel, there are a lot of questions about that. That's where we start in a very busy day here on the North Lawn of the White House with Bloomberg's Michelle Jamrisco who is covering the White House for us today as the Italian Prime Minister visits, just for an added layer of complexity in our geopolitical soup. Michelle, the president's got a lot to think about as he sits down with the Italian PM, and I suspect that Ukraine will be the top of the conversation. What can you tell us?
That's right, Joe, and TGIF did a wild weekend. That 24-hour work week sounded really good to us there.
You've done that today alone.
That's right. Let's talk about what the Italian Prime Minister might be speaking with Biden about today. Yes, he mentioned Ukraine funding. I'm sure you'll hear a lot about that from the general later this hour. We're bound to hear more about that today from the White House and from India and from later today. But it'll be the same message that Ukraine urgently needs more resources. Italy and the U.S. both probably talking about more ways to find more funding, more resources to get to Ukraine and their defense against Russia at a critical time, just past the 2-year mark in that war. The other big issue that we expect might come up today is just counter-China competing with China efforts. So you had a number of announcements this week and this wild week from the U.S. side about policies, including restrictions on Chinese electric vehicles and data security. Those might come up and see where the two sides might meet together and cooperate in a G7 manner and talk about other ways that these two allies can counter China in different respects.
Well, I suspect that the matter of Israel is another one on the president's mind as they try to formulate a speech here next week. Michelle, they were hoping to be talking about a ceasefire as early as Monday. Is it still possible to happen before the State of the Union?
Well, for sure, that's going to be on the agenda. That's going to be the focus of the president alongside drafting that State of the Union speech this weekend when he heads to Camp David. He'll head there this afternoon. But, what he said yesterday when he left for that grueling border visit yesterday on the South Lawn of the White House, he told reporters, yes, hope springs eternal that they would have a ceasefire by Monday. But then he followed that up saying, probably not by Monday. But, and the complications around talks with Israel on a ceasefire just got more complicated with the tragic shooting incident yesterday in Gaza that they're still trying to find answers for on the U.S. side. President Biden saying he was hearing two conflicting reports, at least, of what had happened there and who was responsible. And of course, that kind of gets in the way of these negotiations around getting a hostage deal, a ceasefire deal, to get hostages out, more aid in. So it's a lot at work here. He's going to have a super busy weekend ahead of a very busy week next week.
I guess it'll be time well spent at Camp David with what he has ahead of him. And you can read a lot more about what we expect in the address here on the terminal. As I mentioned, an increase in taxes on the wealthy, Michelle, and plans to highlight the CHIPS Act, which of course is now beginning to dole out money here to chip makers in the process of reshoring. We'll see what else we get. I suspect that there could be some news coming next week on the border as well. You mentioned his visit. We didn't really hear any details, Michelle. Could we get an executive order announced on Thursday night?
We'll see about that. I don't know if we'll have news from the State of the Union on that, but we do hear, this is kind of a messaging battle right now. You saw from the grueling border visits yesterday, President Trump saying, this is Biden's border crisis, and Biden shooting back that he wants cooperation. He extended a hand, he said, to President Trump to join him in this fight. But we'll see. It's benefiting clearly from polling. It's benefiting Trump right now to paint the president as not doing enough and to continue to try to push House Republicans to block these things, which Trump so far has been successful in doing.
Well, if you're watching us on YouTube right now, you see the very split screen that Michelle is describing. Michelle, it's great to see you. Michelle Giamrisco reporting for us at the White House today. She will be in the Oval Office when the president sits down with the Italian Prime Minister. And again, Ukraine is the purpose of this conversation as they try to find a plan B, or are we on to C now? I can't remember. There was a plan D at one point in the House, and we want to get started on this part of our conversation with a voice of authority. It's not very often we have him in studio, but retired General Ben Hodges is with us now. Senior Advisor to Human Rights First, of course, former Commanding General, U.S. Army Europe. It's great to see you in person, General. Thank you for being with us in Washington. Where to begin with the matter of Ukraine? It's looking like if there will be funding, there will be a longer wait. And the administration was warning us at the end of last year that time would run out by about now. This is the first day of March. Are we going to start seeing more of a deficit on the battlefield because of this? Or is Ukraine pushing the calendar?
Well, of course, this is a terrible situation for Ukrainian armed forces, and it's also unavoidable. I mean, it's avoidable. This didn't have to happen like this. I think that we're going to see ammunition arriving from European countries here over the coming months, which they should. But the fact that the United States is failing to deliver ammunition is a terrible reflection, not just on the Congress, though, but also on the administration. Everything starts with the objective. What's the purpose? And the administration has not explained why this is so important to America that Ukraine is successful.
The assessment in Kyiv right now is aiming for July. Russia could, in fact, punch through the front lines by the heart of the summer. What would that look like in terms of the war? Would that be a war loss?
So I think actually Russia does not possess the capability to knock out Ukraine or to punch through and exploit anyway. I mean, they don't have the large numbers of mounted formations and troops and logistics that could exploit, like Ukraine lost Avdiivka about 2.5 weeks ago. There's been no real exploitation of something like that. So what I imagine is going to be happening this summer, there will be local tactical successes along the line by the Russian side, but General Syrskyi and the Ukrainian armed forces are going to stabilize this line for this year to buy time to build up ammunition, build up new units. They've got to fix their personnel system. So this year, I think, is more the year of industrial competition.
Well, and to that end, we're told that even if Congress approves the money tonight, while you're still in Washington, General, we don't have the means to make all of the stuff that we need or that Ukraine needs, that this has become a manufacturing chain problem. And we're not talking about that in this legislation, are we? If $60 billion went out to our defense contractors here, what could they do?
Well, of course, there are a variety of assets that are available that just need the funding to deliver it there. But what you're really referring to, of course, is the manufacturing of ammunition, actually, which is what they're asking for, as well as long-range precision munitions. A little over a year ago, I was speaking to a gentleman in the Pentagon, and he said we make about 8,000 rounds per month because that's what we need for our own training. In less than a year, they quadrupled that number just by making it a priority and putting money on it. So the various companies that make ammunition expanded their capacity. And I heard Senator Vance the other day said that America doesn't have the capacity to make more. What? This is the United States of America? And he's from Ohio. That of course there's industrial capacity. Is there enough political will to do it?
Remains a big question. And the Europeans are looking across the ocean, wondering if we're going to make good on this. At the same time, they've been slow to deliver shells. Can Ukraine count on its nearest neighbors?
It's an excellent point, and it's a fair criticism of our European allies. But even Chancellor Scholz, the German Bundeskanzler, just a couple of weeks ago, was out there at a groundbreaking ceremony for a new ammunition plant in Germany. And here's a guy that nowhere in his past did he ever imagine he would be celebrating the opening of a new ammunition factory inside Germany. There actually, I think, is a lot of ammunition in Europe, but it needs to be reprioritized. You remember the European Union announced they were going to find 1 million rounds to go to Ukraine. They've delivered 300,000 so far. It turns out about 70% of what is made in Europe goes to customers outside of Europe. So now heads of government need to reprioritize what they have.
They're still asking for long-range missiles. I know that the Germans have been kind of on again, off again with this idea. Is there anything that we can do when it comes to advanced weaponry to help them right now?
Yes. The long-range precision strike capability, such as the American ATACMS or the German Taurus, the British Storm Shadow, that there is no one weapon that changes everything. But every square inch of Russian-occupied Ukraine is inside the range of a U.S. ATACMS. So in other words, every Russian headquarters, every Russian artillery, every Russian logistics site could be hit. There's nowhere to hide. Could be hit if Ukrainians had that capability. For whatever reason, the United States, this administration has continued to refuse to provide that 300-kilometer range to attack us. The Germans are hiding behind that a little bit.
Yeah. That would be more effective than something like an F-16 Ukraine right now, would it not?
Well, certainly it would make a huge difference right now. The F-16s showing up probably, I think we'll see midsummer is when the Ukrainians will be ready to employ them. It's one thing to fly them, but to employ them effectively like our great Air Force does, that's an operation.
Abrams tanks are rolling. I saw a video of one of them on the ground in Ukraine. Remember, the argument at one point was, this will not help. This will only slow them down. You got a jet engine in this thing. You can't afford the fuel. Has it been a benefit, or do we not know yet?
Well, of course, it was a whopping 31 that was provided.
Yeah.
So now, 31 Abrams tanks, you get 31 of the best tank in the world. But again, this goes back to the what was the objective? You know, the administration dilly-dallied for months and months and months about whether or not to do it, and I heard so many criticisms of the Abrams tank. Oh, it's so much fuel, it's so much maintenance, and I thought, well, why the hell do we have 4,000 of them in the U.S. Army? Sorry, it is a great tank, but you don't just take it off the shelf and use it. There is maintenance required and training to get the full benefit of that great tank. What really matters is how is it employed by the Ukrainians, and I'm sure that they'll pick the best place where you get the most effect out of it.
Just got about a minute left, General. We saw news of a hypersonic missile being employed by Russia in Ukraine. We're told that our Patriot defense missile systems cannot catch those. Is that a game changer if we start seeing more use of that technology?
Well, first of all, I would never underestimate the ability of the Ukrainians to take what they have and make it better. I mean, we've provided things, and then like counter-fire radar, and I found out that radar was even better than I knew it was, because they were able to, if you're getting attacked by the Russians all day long, you get very innovative, very creative, and Ukrainians are among the most tech-savvy people I've ever met in my life. So I think they will figure out how to use what we provide, what the Brits provide, and they'll be able to. It's not about quality, it's about quantity. They don't have enough.
I know you're typically living and working overseas, but you're always welcome here in Washington. We're always very curious to hear what you have to say. Our thoughtful General Ben Hodges, it's great to meet you in person. Thank you for coming in.
Thanks for the opportunity.
Of course, great pleasure. I'm Joe Matthew in Washington. This is Balance of Power, the fastest show in politics, as we turn our attention back to Congress coming up here. And what did not get done this week, that list is getting long. We're not going to shut down today, though. At least you can have a weekend. This is Bloomberg.
World Headquarters. I'm Charlie Pellet. We have got the Dow, the S&P, NASDAQ solidly in the green, and right now we are looking at the best level of the day on the S&P 500 index, higher by 26 points now. That is a gain of just about 0.5%. Dow Jones Industrial Average up 64, higher now by 0.2%. The NASDAQ Composite Index surging another 122 points of 0.8%. NASDAQ, by the way, now at 16,215. 10-year yield 4.19% with a 2-year that is now yielding 4.54%. Spot gold up $39 the ounce, surging 1.9%, 2,083. Looking at West Texas Intermediate crude up 2.5% right now, 80.24 for a barrel of WTI. We're keeping an eye on shares of NYCB, commercial real estate lender. New York Community Bancorp plunging after saying it discovered material weaknesses in how it tracks loan risks. It wrote down the value of companies acquired years ago and replaced its leadership to grapple with the turmoil. NYCB shares, they are down now by 23%. Again, recapping, we do have stocks pushing higher with the S&P right now on 26, a gain there of 0.5%. I'm Charlie Pellet. Balance of Power continues, and once again, here's your host, Joe Matthew.
All right, Charlie Pellet, thank you. Welcome to Balance of Power on this Friday here on Bloomberg Radio, on the satellite, and on YouTube, where you can watch us right now if you search Bloomberg Global News. And it's not just this program. Find our live feed there. You can back it up, catch up when you need to. It's pretty cool. Live from our studios here in Washington and in New York. So many ways to find us on Bloomberg here, talking politics with all the lawmakers gone, well, at least most of them. They got it done yesterday. We're not